A very good morning to you. First day trading of March. Welcome, Chris Beecham, to Trade Live with IG. Chris and Rich in the morning.
Good morning. How are you?
I am very well. A wonderful weekend. Very chilled, very relaxed. Luckily, I had the pay-per-view on Friday night, the big fight.
Oh, this is the day where we talk about sports things that I haven't seen.
That's right. I think you might have seen this one. It was the best.
Oh no, I saw that one. Yeah, exactly. It's embarrassing. Well, we were having dinner when the news came through, and we got the BBC push notification about.
You switched it on?
Well, we saw it then.
Live from the Fight House was the best one I saw. That was the front page of the Sun on Saturday.
Yeah.
Good morning, everybody. Welcome to Trade Live with IG. Very good morning to you. Boise is in the house. Julian Musto, Funky Gibbon, and the wonderful, the one and only Monkey Man. Good morning to you all. In the gallery today, we have Terence, and Phil is back with us, as well as producer Fred. How did Arsenal do at the weekend? Oh, I'm asking the wrong person, haven't I? Didn't play. Okay. No game for Arsenal. Of course, it was the FA Cup, wasn't it?
Yeah, it was. Yeah, exactly.
However, we do have Phil live in from being at the ABBA hologram concert on Saturday. Have you been to that one yet?
This is just going to be an hour of you asking me things I haven't done. You know, the ABBA hologram concert.
It's an ABBA voyage.
Right.
So it's across east somewhere, and you go into a room and they play the holograms.
Right.
Motion capture, but there's a live band, so it's still ABBA music.
Right.
But yeah, you're meant to boogie away.
Isn't ABBA about 50 years old now?
Well, that's why it's a hologram.
Well, yeah, but people are still obsessed with this stuff, and it's 50 years old. It's getting a bit ridiculous.
Things that are over 50 necessarily to be traded at a discount?
I don't know. You might know. You're closer than I am, but
absolute rubbish. I'm not older than you, am I?
Oh, you are. Yeah.
Jeez.
How old are you?
Oh, I was born in the 80s. The 80s.
So was I. Well, which side of the 80s?
Okay, no. Well, yeah, you definitely beat me then, because I was actually meant to be born in the 70s.
Oh, well, then yeah.
But my mother held on an extra 2 weeks. I was late. Which was a great help when it came to athletics, because it put me in the age group below, and I was therefore oldest in the oldest for my age. Shall we have a look at what's coming up on today's show, apart from our chit chat? So today we have got coming up. I think we're going to press the button.
We do have something coming up, I guess.
And there we go. Right, trade expectations with Matt Arbour. That's right. Volatility is down this morning, down 1%. So let's hear what Matt Arbour thinks coming into a huge week of macro data. 8:58, we've got Aaron Bright. What's going to happen? Massive rally late on Friday. What's going to happen on that all sessions open? Trader Tools, Aisha's back. Aisha and I had a wonderful chat about 2 weeks ago. She's back in to give more of her wisdom as your client experience manager. And then 10:05, of course, we have the wonderful, the one and only Axel Rudolph, giving you his technical expertise, but also his trade of the week.
Ooh.
Short NASDAQ, he smashed that one.
Well, last week, yes. Is he sticking with it, though? It's crucial, isn't it? A bit of a bounce on Friday. Is he going to be...
Oh, I think it hit his profit target on Thursday.
Okay, fair enough. Well, it was a hell of a move on Thursday, wasn't it? Absolutely.
Yeah. So shall we have a look at what happened over the weekend then, as well as what wonderful things we have in store for you? First of all, we've got the week of that NASDAQ, right? So you saw Thursday, the 27th of February, right? Going way back to the 27th of February. Remember that long ago?
Way back in time.
We have 21,300. Then we saw that plummet down to 9 p.m. on Thursday as they spoke of tariffs yet again. 20,500, 800 points lower we travelled. And it all looked like it was set to go lower again on Friday night as Zelensky and Trump exchanged punches.
Well, it was almost more of a Vance Zelensky punch-up, wasn't it? And Trump,
He is
kind of,
an absolute.
you can't say this word, whatever it is you're going for. Yeah,
Do we have a beep?
he doesn't come across as...
Vance is yes, boo for Vance, definitely.
He doesn't really make himself...
Whatever you think about Trump, you can argue that he is running America like a business, and if there were shares in it, you would buy it, right? Because make America great again, bringing back all the jobs, create jobs, hit all your rival competition, and create a monopoly. But Vance is just vile.
Yeah, isn't it funny? And yet, I don't know. It's really odd because do you see Marco Rubio as well, the Secretary of State, sitting on the sofa?
Oh no, I didn't.
Sitting there with his arms folded like this, clearly wishing he was anywhere else.
Right.
But live in front of the world's cameras, watching these three men go at it, hammer and tongs. And of course, they were supposed to have lunch, and they left, and the White House staffers apparently ended up eating the lunch.
The White House staffers eat the lunch?
Yeah, they left because the lunch was there on trolleys, and they were going to bring it in because the whole thing is they're going to have lunch before they sign the stuff. Because there was supposed to be a press conference, wasn't there, afterwards? Yeah. And then obviously there wasn't a press conference.
Now, talking about taking things that aren't yours. You got a story about Angela Rayner.
Oh, yes. Yeah. We'll go from the sublime to the ridiculous.
This absolutely.
It's in the Telegraph and in the Mail, so I'm not just... I didn't just make this up. It turns out Angela Rayner there was drinks in the flat at Downing Street, in the PM's flat where he lives, and he left the room for something, and she was left in charge of making the drinks, and she opened a bottle of whiskey. Unfortunately, this bottle of whiskey was a very treasured gift from a friend who'd sadly passed away several years ago, and Starmer had never planned to open it. And he goes back in the room, and there's Angela waving this bottle around going, "Kid, do you want a drink?" And
we found it. There we go.
Yeah.
We found it.
He was very nice about it, but opened up the bottle and...
Yes, Phil. I found a bottle of whiskey, she says, and I opened it. When he comes back, I'm going, "Kia, this is such nice whiskey." And he's standing there looking at me going, The bottle, it turned out, was a treasured prime ministerial possession as the last thing one of his closest friends gave him before passing away. Starmer had never intended it to be drunk. I felt really bad when he told me. I was like, oh my God, I'm mortified.
That's where the line is on Scotsman doing Northerners impressions, but I'll leave it to my wife.
I watched a lot of Coronation Street when I was young, Christopher.
Did you? Oh.
Can
you do the two Ronnies bread thing? Can you do that one?
Which was that?
The Hovis advert. Can you do that?
Oh, no, I do. I think I recall this.
About when he's walking up the hill.
There's no way that you are younger than me. There's no way that can at all be possible. I'll go with your Fawlty Towers, but the two Ronnies.
Well, yeah, but the two Ronnies was endlessly repeated in the 80s, wasn't it? And the 90s.
It was, along with Hello Hello.
Hello Hello.
That our good producer friend is a big fan of.
I bought the whole thing on DVD, Hello Hello.
If anybody wonders how producer Fred sounds, then just think of René. And this is what I have in my ear all morning.
There are worse things to have in your ear all morning, really.
So it's the same. My brother-in-law has a bottle of whiskey that he was given for his 25th birthday, and it's a 25-year-old bottle, a bottle of 25-year-old Balvenie.
Lovely.
And he's never opened it, and he reckons it's worth, I think it's about £800 now, and he refuses to open it.
But then you're stuck with it, aren't you? Does he keep it somewhere safe? Because if you leave it out with the drinks...
I've never even seen it. He's never showed me it.
Okay, that's probably a good idea. There's always that horror story, isn't there, of somebody drinking the whiskey that you were keeping.
But I give him a bottle of Balvenie every single Christmas.
Right.
In the hope that he might mix them up one day and open the proper one. Right, let's go to overnight action. Let's see what is going on. Monkey Man giving us the... now, where are you seeing that, Monkey Man, that MicroStrategy is already up 15%? Because that's, exactly what I was thinking. I was hoping to buy it up 8, but up 15 does seem a little bit lively. Now, of course, this is because yesterday at 3:24 p.m. Great London time, Trump decided that crypto had had enough of its fall and his friends were losing too much money. So put out, of course, a poorly worded Truth Social message that he was going to create this
Poorly worded is unnecessary, isn't it? Really, they're never great works of literature.
Well, the wording was incredibly important, and thankfully made me a lot of money because, of course, he only mentioned Sol, ADA, and XRP.
Right.
He didn't mention BTC and ETH.
Right.
Now, he said including. Right, which was the most obvious thing that, of course, he's going to buy Bitcoin and Ethereum in his taxpayer money portfolio, sovereign wealth fund,
Whatever you want to call it.
but they didn't move. And so you can see on the chart now the original move came at 324. It spiked Bitcoin up to 88,600, but then dropped back to 87,000. Ethereum dropped back to unchanged on the day. And Trump and his friends message him, what on earth are you doing? You're meant to ramp this other coin and you haven't. You've only managed to ramp these ones that we don't even own. Can you please send out another message? So of course he sent another message. I love Bitcoin and Ethereum. And of course they'd be included. So then we had a mass 7% rally in Bitcoin. We had a 12% rally in Ethereum. And if you knew what including meant in the English language, you had a chance to make a lot of money.
Yeah.
But not on leverage, of course.
No, you'll be careful with this. Dangerous product.
Very dangerous product and dangerous on leverage accounts especially. So, yeah, very, very risky. And coming with the ultimate health warning, as does MicroStrategy.
Yeah. But with those companies will certainly be in focus today as well as Bitcoin to see what that does, because the argument, of course, being, as many of our viewers will know, MicroStrategy is essentially what a levered bet on Bitcoin, isn't it? It's Bitcoin on steroids, really. And so a lot of people, if you are in the UK, for example, and you can't trade Bitcoin, people are using it as an alternative, essentially. And there it is, right there with that green candle.
That's right. God, I wish I could see it as well. You've got the problem. The problem was that the move from 324 down to 243 made complete sense. Then you had a late rally on Friday. So you had a late rally in everything on Friday, but especially MicroStrategy. Was there awareness that something might happen? Who knows? But the important thing is that Bitcoin and crypto is not regulated. MicroStrategy is. So if there was ever anybody had done something like a, senator
then, of
or
course,
somebody like that.
Yeah, but then of course Friday saw a huge rally in most things, didn't it? As you said, so it's hard to pin it down. Is it Friday afternoon, end of month? End of the month rebalancing, that fabled thing that's supposed to happen. It's the one I always use for the end of the month. If the markets move, you don't know why, you just say it's end of month rebalancing.
And it, my goodness, did it feel like there was some of that going on Friday night? Yeah. Because if we take you in, well, this is a 5 minutes. If we take you into that last hour, considering basically America just walked away from the peace process and Trump made it very clear that he was on Putin's side.
Yeah.
Then for the market to rally 500 points in the face of that in the last hour of trade was remarkable.
Yeah.
Absolutely remarkable.
But it'd been a one-way move all week. So in one sense, it's not surprising. If you're in a period of higher volatility, not massive volatility, but certainly higher volatility, if you look at where the NASDAQ 100 has come back, because we were at a record high in that, 2 weeks ago. So it's not as if we're in this kind of sustained bear market, but you've had this huge move to the downside. You just you stretch the elastic band far enough. I think it's what it was on Friday, and it's the end of the month. I think that does have some logic to it, that you just get this snapback. It's the key thing is what it does from now, because if it keeps going, clearly that sends a message But
Yeah.
if it reverses back in sort of in the cash market, maybe this afternoon, back below say 20,700 or so.
Which takes us very nicely on to what comes out at 3 p.m. this afternoon. Meaningless, according to Sir Beecham here.
No. I didn't. You're being unfair. I did not say that about the ISM number. I meant the final PMIs that come out. You were being unfair. Unsurprisingly.
So not these ones. Right, so 3 p.m. this afternoon, as I think I can see on screen, we've got ISM manufacturing PMIs coming out. 51 being the expectations. However, keep a very close eye on those manufacturing prices because that, of course, is going to be extremely important.
Yeah.
And the new orders as well, because we're seeing indications of a considerable slowdown.
Yeah.
But it's kind of technical, isn't it?
I suppose so, although all slowdowns have to start somehow, and that's the key thing. It was last month's services ISM, wasn't it, that had the prices paid figure that spiked another bit of volatility, didn't it? So this is perhaps the key thing to watch more than the number itself, is the prices paid sub-index.
Yeah. But then I think we've moved. There's a pendulum swinging, isn't there? Inflation to growth.
Yeah.
And last week the pendulum of worry
Went to growth.
really moved to growth.
And you had the Treasury Secretary, didn't you, saying there were pockets or certain fragility or weakness in the US economy, which is coming after months and months of the economy is strong, it's doing really well. To have the Treasury Secretary come out and say that,
Yeah.
it does kind of spook people. You had chances of two Fed rate cuts suddenly, early as June, I think it was now.
So, guys, can you turn the mic off, please? So, the thing that really set the cat amongst the pigeons on Wednesday was that when you have threat of tariffs, right? You have the threat that everything's going to cost 25% more. The immediate thing to do is people to rush and buy those products before the tariffs are applied. So what in fact happened is that huge amount of dollars has gone offshore buying these international products. And that has made the GDP now figure look like it's fallen off a cliff.
Yeah.
So we've got a minus 1.5% reading for GDP now.
Yeah.
And that's where big worries came in about growth. But then that's a one-off because you can only...
You buy it once.
You buy it once.
Yeah, exactly.
But does that give the indication of what's going to happen afterwards? You know, that there is everybody expects prices to go up. So inflation expectations are going up.
Yeah.
And the wall of worry goes back to inflation.
Towards inflation, exactly. And growth starts to recover quietly before everyone notices. But this is the key thing. If you look at the inflation expectations split by party affiliation in the States, it's wild. The Democrats are now looking at 5% inflation next year, and the Republicans are looking at naught.
Right.
So it's very much a case of you're defined by how you see the economy, unsurprisingly, as to how you see the presidency.
Yeah.
So that's really interesting, because the inflation expectations thing in the Michigan index last month, or was it January's figure, was the other one that really set people worrying.
Of course,
wasn't it? But people were worried the prices are going to go up. And people think prices are going to go up. They tend to, because they start stockpiling.
I heard a new term over the weekend, slogflation.
Go on.
Not stagflation, slogflation. Just that it's a bit of a slog
Right.
at the moment with
I think these terms are getting out of hand, aren't they, really?
Yeah, I'm not sure if that one's going to stick.
No. So the June meeting is the first one where the probability of a cut comes into play, 57% chance of a 25 basis point cut.
Yeah.
So that's the first one.
Now, the rest of the week, what about Friday? Friday is going to be a real interesting show because we're getting, not only have you got non-farm payrolls to look forward to, but you also have International Women's Day special with Angeline and the ladies having a female takeover on the show. So it's International Women's Day special on Friday. Angeline, who I see is currently running across the bridge, she's on the chat, has an entire lineup of the wonderful ladies here at IG for Friday's show.
Good. Does that mean I get a Friday off because I'm supposed to be on Friday morning?
That exactly means I'm certainly taking it off. I'm actually presenting to your old student clan on Thursday evening.
Oh, so Kings.
The Bristol students. No.
Oh, I didn't go to
Bristol.
No, I did a lecture at Bristol with IG. It's not a lecture, seminar.
So yeah, so I'm going to present to the wonderful students there.
How is your West Country accent?
Probably not as good as my Northern one. So so they're on Thursday night. Therefore, I will be having Friday off. I'll still tune in. I'll be on the chat.
You'd be allowed to talk as a man.
Well, that's true, actually. I haven't cleared that with Angeline.
No, you should ask permission.
Okay.
For that.
Right. We'll find that out. Right, we've got a few minutes left before we get your upgrades and downgrades. They did come through a bit late this morning. John McGuinness has had a big weekend, clearly, down in Dubai. And we've, non-farm payrolls, Christopher. Are the jobs numbers of everybody that Elon sacked going to be included in this month?
Yeah, exactly. This is the key thing, isn't it? It's beginning to show up in the figures. Is that enough to bother people? We're expecting, I think, a little bit of a rise in employment, I think, from last month. But the unemployment rate's meant to hold at 4%. So at the moment, the answer is no.
Is there a scenario where unemployment stays low, but job cuts, net non-farm payrolls go much lower, even negative?
Yeah, you could probably see that kind of scenario.
Because of the immigration.
It's enough to think about, really. Something to bear in mind. Payrolls, even if it's like a beat and miss of 200,000, is a very small percentage of the overall US workforce. So we are talking about the margins here.
Yeah.
Certainly month on month.
So it's up to 270,000.
Yeah, I think that's about it, really.
Yeah.
But if you're looking at, because we've been fairly solid. It's been, you can argue if you look at the figures since 2022, it's probably on a downward path every month, the rough direction of travel, but we're still very solidly around the 200, 300 mark most months.
Let's have the look at the expectations, because of course it is so important this week. So non-farms exactly 133 to 150, that's your range. 4% unemployment, 4.1% earnings increase, so that's in line with last month.
Just holding steady, really, I suppose.
Yeah. In fact, everything's pretty much holding steady. Yeah, it's basically a repeat of last month, which is surprising in a new administration.
Maybe. There's always a sense, I think, with the way financial news works and with the way markets work, there's always a sense of people looking for the next crisis. And if payrolls just remain relatively stable, there's not much you can go on. It's like the fact that there's this constant focus on what will the Fed do next. What if the answer is the Fed doesn't do very much at all in the quest to maintain stability? There is no real story there for markets, particularly.
But stocks are responding, right? Because you look at something like Deckers with Hawker, with a lot of the consumers, Abercrombie's another one, that take goods from China, and their share price have been absolutely smoked because of this concern of increased costs. So there's only one way they can respond, and that is to increase their prices or demand drops.
Yeah. Individual stocks, I think it's fair to say, even if you look at the indices, I mean, yes, we had the lowest level in the NASDAQ 100 since mid-November. But that's only mid-November. That's 3 months, 3 and a bit months. It's given the way with markets have moved over the past 2 years, it's more consolidation than anything else.
Not so much about the markets themselves, though, but the actual consumer, right? If you've already had the cost of living crisis, you've had companies trying to rinse consumers as much as possible and squeeze everything out of them that they can by protecting their own margins, putting prices up. So if you go and increase their costs by another 15 to 20%, where is the price elasticity?
Yeah, they can't respond in the same way. There's a major, and that's an argument for why tariffs might actually end up being deflationary, because if they do hurt demand and people continue to respond in that way and they buy less, demand drops, the economy starts to slow down, prices come down.
Elon gets sacked.
Elon maybe gets sacked, and you get rate cuts of the bad kind, I think.
But I think that's what the market's starting to sniff out, though.
I think so, yeah.
So then we could potentially be in for a, is it 10% correction? A lot of people this weekend started talking about corrections.
I think so. And because you had 2 years where people were going, there was a recession coming, there will be a recession, it has to hit at some point, and then it hasn't. And now everyone says, well, last year especially it was going to be soft landing, the Fed will manage this perfectly well, and to be fair, they have. But if the new administration's policies provoke this weakness, maybe then you get the recession. Because as I said then, when everyone's saying there will be a recession, I think it's unlikely. But as soon as everyone switches to, no, it'll be fine, there won't be a recession, everything will carry on, that's when you should not take an outright bearish position, but you start to think, what if?
Pare in your risk.
Yeah, exactly.
Yeah.
To an extent.
Excellent. Right on cue for a quick 2-minute break, and then we're going to come back. We'll try and get your upgrades, downgrades, and then we've got Chris Peacham opening the London Stock Exchange.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Excellent. Right, a few quick things that we didn't go through. An interesting one I only just spotted in the Times this morning. Didn't realize this was happening. We have a new entrant to the FTSE 100 this week.
Oh, exciting.
Coca-Cola bottler will become something like the 25th biggest company.
Is that HBC? It's a Hellenic Bottling Company, as was?
The sister.
Yeah. The sister?
Yeah, it's a completely different company.
Oh, right.
Yeah.
How exciting.
So CCEP, Coca-Cola Euro-Pacific Partners, will become, it is on the, I think it's Thursday. The quarterly reshuffle will take place this week. Let's get a confirmation on what day it is. Excuse me. Sorry, should have had this. I'm pretty sure it's Thursday, but it might be Thursday night close into Friday. So let's have a look at that stock for you. There it is, Coca-Cola European Partners. We've got, so I guess the announcement was here, so it's moved already. If you're thinking about buying it for the entry, I think it looks like it's moved about 10% in the last week since that announcement. So it would have been handier beforehand. Shall we do quick upgrades, downgrades before we go into the opening bell? We'll get it just after. Chris, do you have the bell ready?
I do have the bell ready, yes.
And have you... right, upgrades, downgrades. Quick 20 seconds before we go. Let's see it. There is ABI InBev upgraded at Deutsche Bank. Diageo raised to hold at Deutsche Bank. They've had a great call on the alcohol names there. Carrefour cut to sell by Brian Garnier, and Deutsche Post as well cut to hold. Great. 3 seconds before we open the London Stock Exchange. Let's go. Chris Beecham. Is that it?
Yeah, it's a nice restrained bell.
Okay, it's a very Monday.
I feel like I'm going to break the damn thing. It feels very delicate. You need a big one that you can...
I'll give it a smash. If we break it, we break it. To be honest, I think that a new one is needing.
You need to do a
brought in
Jeremy
anyway.
Hunt with the Olympic bell. Do you remember that?
He was?
Jeremy Hunt, when they had the London Olympics, and he rang the bell on HMS Belfast, this big thing, and it
Oh.
just flew apart in his hand
Oh,
in live TV, and then he smacked somebody over the head.
Right, we got Rolls Royce up 4%. Rolls Royce up 4%. 773 new highs for Rolls Royce. Some really interesting moves here this morning. We're off to the races already. Away from the numbers, Neil is saying Legal & General is at its breakout point. So Legal & General, one to watch. Is it going to stay in the channel 235 to 245, or is it breaking higher than 245? John Wood up 2%. Didn't see anything about the takeover at the weekend. Was there any press?
I don't think so. No, not more news, but a lot of it's in the price, isn't it, now, I suppose?
We've got Chemring up 7.2, of course. That was in the news last week. Elsewhere in the FTSE, up 1%. ITV, Kingfisher, Aberdeen up 60 basis points. And on the downside, Travis Perkins, WPP, Bellway Land Securities, Whitbread. Now, Whitbread, there is a story. Let's quickly go to that if I still have it. No, I do not. I'll get you that story. But yeah, Whitbread, just some negative noises in the Times this morning from the CEO. Sounds a little bit like lining himself up. You know, I wouldn't be overly confident. And Jamie, if you're listening, I wouldn't be overly confident about reading the article, what the follow through would be for the next guidance that he
Not
gives.
kitchen sinking it, so getting the bad news in now.
It's a complaint. Yeah, it's a complaint against the government and national insurance and everything that expected. But he just says how hard it's going to be.
Right.
So, yeah, getting ahead of any future messaging. So I can understand that one. Well, it's not. It's up 22 basis points, but it is down at £26.80. Or he's particularly confident about his revenues, and therefore you can talk down his costs.
Yeah.
Right, ThyssenKrupp up 5 in Germany. Across, looking at Europe, Airbus up 1.8. Rheinmetall up 13%. That's right, 13%. This thing is endless.
Now, did they make tanks? They do, don't they?
They do indeed. They make everything that you'd want if you were a military buff.
Yes. So this is because European leaders over the weekend have essentially... We had the UK defence announcement last week, and then we're expecting more from Europe. There was a report I saw over the weekend that suggested Germany, the new Chancellor, was looking at this massive 1 trillion stimulus package based on defence and infrastructure spending.
Okay.
So it's sort of combined. But the
Hugely positive for Vodafone.
Yes. Oh, Vodafone. There's always a Vodafone angle with you, isn't there?
It's the biggest business is Germany. Infrastructure in Germany.
Yeah, so €1 trillion worth of spending was the suggestion, and that would then naturally flow through to things like defence.
Yeah.
So all these names are particularly in focus.
Right, British BAE, have we had, is it open yet? I would imagine that one could be up more. All right, so BAE looking up more than 5%. That's right. R6 Senna, you are going to be happy this morning. If you are watching, your BAE has been a great shout there. Iron Brew up 1.5%. That's, of course, the parent company, AG Bar. And Bunzl, on the back of earnings, up 2.8%.
Yes, you got to like Bunzl. Do you know what they do? They have this acquisition strategy. They just buy lots and lots of tiny companies so that it never really affects the price.
Yes.
They say, oh, we bought Mum and Pop Packaging Incorporated in
10 million.
in upper whatever Slovakia, and nobody notices, and it just cumulatively That's how they do it.
Wonderful.
So don't go for these big acquisitions that command
Brilliant.
headlines.
That's yeah, Rheinmetall still going up 15.8 now. Oh, I know somebody is going to be happy with that. Right, Travis Perkins down 2. Severn Trent, Nat West just fallen back a little bit. Is everything else sort of mid-pack there? Whitbread down 22 basis points. Vodafone straggling the 70 pence line. So that's outperformed NASDAQ by about 4% last week. WH Smith unchanged. So yeah, we got a whole heap of unchanged as usual on a Monday.
WH Smith, because they're flogging off the high street arm, aren't they? And the name's supposed to disappear now. So we're going to lose Smiths from the high street.
Do you know what? I did actually quite like that story when it first came out, and I was considering about buying them, and it's come right back off. Thank you, Chris Beecham, because that, to me, was a nice restructuring story, and you can see exactly where it had that jump.
Yeah.
But it's come right back off.
They make all the money from the airport terminals and nothing from the high street, which you can understand if you've ever been into a Smith's. It's a very sad reflection of what it used to look like, I have to say.
I think I'm gonna so what, it's £11.
Oh, we're watching the master at work here. Yeah. Watching Jesse Livermore place trades is fantastic.
Right,
The boy plunger himself is here.
11. Do you know what? Just for your sarcasm there, I'm going to do it absolutely the way that you're meant to do it. 11.61. I'm going to go in to buy 1,000 shares. I'm going to put a stop on it of what do we want? 5%. So 50 pence. And I'm going to put a limit up there. I want to receive 13. So 150. Want to make 150 points on it. So a 3-to-1 payoff.
There you go.
And that is going in. Now we had some news in the weekend press that there's a couple of fund managers that are struggling a little bit.
Oh yes, Nick Train and what's his name? The other one, Terry Smith.
Terry Smith, yeah.
The great Fundsmith guy, yeah.
So here we go. Smith and Train suffer 5 billion of withdrawals from their funds. This is that kind of why have I not just got it in an S&P tracker when the S&P tracker goes up 25% a year? Mm. Usually ringing the bell at the...
Yeah, exactly. So people have just got, oh, my fund hasn't done as well, therefore I'll take my money out. This is the problem with benchmarking, isn't it? If you make 20% in a year with fund management, well, you will of course know this, but the index goes up 21%. You've underperformed your benchmark. You've not done well enough. You don't get a bonus this year. But if you lose 10% and the index loses 11%, well done you. You can have a bonus. It's just how it works. And the industry has to work somehow, I understand. But this is the problem, is it, for them, because they're in... Terry Smith's a big... I think you're fair to call him a value investor. Yeah. Wouldn't you?
Absolutely.
So, unsurprisingly, after 2 years, when it's been growth, Mag 7, blah, 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 value stocks not done very well. But always that kind of thing of, oh...
Well, then you get a 2022.
Yeah, and then you say, oh, well, I have to go back and buy those now. So you buy it back again.
Yeah.
So that's the problem for investors, really.
Right, British Aerospace. I'm so lucky I'm not short.
Wowzers. There she goes.
14%. That is, I can hear Axel's voice in my head. I can hear what Axel would say to that. Thales up 16% as well. Thales up 16%, Rheinmetall up 17%, and British Aerospace up 14.4%. Let's see where that leaves British Aerospace in the grand scheme of things.
That's mad, isn't it?
Let's go back.
Breakout.
How far do we want to go back?
It's a record, I think, isn't it? I'm on a weekly chart. Is that a record? There must be a record high. Yeah. Mine goes back to 2000.
Really?
It's interesting because in December 2020, it was at £4 a share, which is essentially where it was 20 years earlier. Mm. And now it's up fourfold in the same space of time. So,
what? Oh, I need Axel Axel on line 2, please. We need to know what he thinks of that kind of gap and that
trend
kind
is
of
your friend.
candle. Wait, what was that one? Where does that go now? Because that is a huge gap for a FTSE name, £14 to 15.50. Oh, I don't know. I'm obviously thinking of shorting it, but
Gap and go, but you know.
This is just a minor retracement.
it's definitely not that one. Right, okay, so 15%. Where do you think British Airways goes? British Aerospace goes? On the chat, Andrew McKelvey, where do you think BAE goes? Because we've got somebody who is invested in it, and that is Miss R. Saxena. Absolutely fantastic call by her. Rolls-Royce falling it higher, up 4.8% as well. Shall we have a look at the commodity corner, sir?
Why not?
What are the commodities doing in this new world where it looks like the US is aligning itself with Putin, and we've got a potential deal on the table from Macron, which is a 1-month ceasefire.
Yes. Well, partial ceasefire.
Partial ceasefire.
So air, sea, and energy infrastructure.
So you can still
pop at each other on the front lines, but this
Okay.
kind of sort of broader conflict, as it were, has been ruled out. Because that's where I think the Ukrainians, they hit a Russian energy installation about 1,300 kilometers behind the front lines. They're both doing it in response.
Yeah.
But it's I try and contain the conflict to this localized ground war, if you could put it that way.
Right, so no escalation.
Yes.
You remove the risk of escalation. Germany up 1% on the back of that. Germany up 1%, well, approaching 1%. FTSE up 45 basis points. That's what it was showing pre-market. So that's about in line.
New record high.
New record high, that's right. We forget to mention that now. We've become so accustomed to the FTSE.
That's boring now, isn't it?
Yeah.
Yeah.
And we there we go. Axel just sending me a message to say that the FTSE's hit new all-time highs. So we are really on that supernova highway to the best performing index. Although the DAX takes it, doesn't it?
Yeah, just about. Which is not a record high today for a change, but it's still coming back after the election last week.
So pretty much everything is leaving the US behind. We've got China higher.
Yeah. Well, Hang Seng, didn't they reverse overnight? They ended up sort of flat on the day, I think. Yes, because we were at 23,400 on the Hang Seng, and then we were back down about 400 points, so they stumbled.
I need that wonderful Bloomberg page that shows you all the indices year to date and ranks them. See if we can get a copy of that for everybody as the morning goes on. Okay, what else then? BAE Systems up 16. Where does it end today? Where is Blue Elegy? Now there is a new person on our chat, and Blue Elegy bought the 3 times BAE. I think that's Granite Share. Granite Shares offer the 3 times BAE.
Do they? That's very niche.
There's a 3 times Vodafone.
Of course there is. Of course
There is the 3 times Vodafone. Granite Shares offer all those.
They created just for you. Was that the idea?
Yeah. It was me. I phoned them and said,
Yes, Mr. McDonald, we can do that for you.
I want a 3 times Lloyd's, a 3 times Legal and General.
I've got a boring stock 3 times.
Yeah.
Yeah.
So just a health warning on those. Trading anything on leverage, you really need to know what is going on with the carry, right? Because, of course, it's not just as simple as if stock moves 5, it goes up 15. You know, if the stock moves 10% over 6 months, then you're having to pay for your leverage inside that cost. So it's really important to know what you're doing. They are meant for short-term trading only, but Blue Elegy has nailed it with the 3 times BAE on Friday. Neanderthal Neighbour, So there's risks to us blocking people on the chat, you know. Max leverage short Vodafone, he says. Good. That's what makes a market.
Yes, it takes 2 views to make a market. Very true.
Right, so we've got... What are you looking forward to this week, Chris? What's the...
Oh, it's one of those weeks, isn't it? It was only payrolls is the main thing, really. Earnings season is dropping off very quickly, so that the excitement from that has gone. Powell speaks on Friday.
How much excitement do you want? You had...
Well, yes.
The biggest ever political bout live on television on Friday, and then you had Trump completely...
Because this is what you get in diplomatic chaos, isn't it? The Prime Minister and the President had a frank exchange of views, which essentially means they screamed at each other over a table for an hour. And suddenly, you never see this. Even in the press conference, you can pick up hints of disagreement, but they're usually very cordial. And suddenly it's being played out in front of everyone in real time.
Was it intentional? Did they bait him?
Purposefully? Some people have said, because there's enough people arguing this out on social media, some people have said, yes, they did it purposefully. And other people have said he didn't want to sign this particular deal, so he was being... Now, some people have said that if you watch the whole thing, if you watch all 50 minutes, should the time be available to you, that he's actually quite uncooperative and blunt. I don't know, because I've not seen it. I need to find time
to Kiev
to watch it. Exactly. So you can. I think the immediate reaction from most people was, this man is under pressure. He's leading country at war. You can expect him to be slightly prickly.
Yeah, and English, you know,
and it's his third language.
English.
Third language.
Exactly.
So that thing about you don't hold the cards, and this is not a game. So clearly the nuance of language, and when he tries to say, if you don't stop the Russians now, they will come. It will hit you in it, which is what anyone would say about these kind of things. But it just doesn't play out well when you're trying to argue in 2 different languages, essentially. So
his costume comment.
Yeah, and the journalist said, "Why didn't you wear a suit?" All that kind of thing. And it's some people would say, well, if you are going to butter him up, essentially, if Trump is giving you all this stuff, the US, if you're going to really butter him up, it has to be a bit shameless. So you do have to play to your audience.
As Starmer did. On his knees.
Yeah, exactly.
Please take my letter from the king.
Yeah, exactly. And of course, the SNP over the weekend said they should rescind the invitation. I suspect what will happen is
he's Scottish.
The Americans will say, "This letter, can we come over next week?" And they go, "Sorry, we're washing our hair that week. Can you let's talk about it later?" And it just gets pushed back.
I thought it was a huge mistake to then offer Zelensky to see Prince Charles.
But Zelensky asked. Apparently.
Yeah, but that was a huge mistake.
Well, I suppose it's also a bit of a message.
Your absolute trump card is a meeting with the king. And you presented it to Trump to basically stop yourself getting 20% tariffs, right? We have a trade deal coming up with the US that is absolutely huge for the UK economy.
Yeah.
And it completely washes away any hangover from Brexit. And we go and F it up by trying to help Zelensky to save face.
Maybe. And of course, he went to Sandringham. So this isn't even an official visit. This is more of a at-home, quite cosy chat. So yeah, maybe.
I would have loved to have been on the phone, Starmer to Trump on Saturday morning.
Yeah, exactly.
That is diplomacy at its absolute maximum. What can I actually do with Zelensky that won't pee you off?
Yeah, it's so rare to see this kind of thing being played out in real time in front of everybody. You have this defence summit with Europe being seen. And it's interesting because they had Meloni came, obviously, and she's very good friends with Elon Musk. So there's a whole lot of angles to this.
Not Melania.
No, whatever's going on there. Because it was the Queen, the late Queen said about Trump and Melania. She said, there's definitely an arrangement there. They've got an arrangement, she apparently said. Yeah.
You mean it's not true love? British Aerospace is true love. If you have it this morning, you are 18% better off. Or Blue Elegy is 54% better off.
Well done.
And what do we struggle with if you're holding Wizz Air? Well, why are you holding Wizz Air? For Expo is an interesting one to come out of the Ukrainian resource chat. What is going to happen there? Of course, the talk is that now Nord Stream 2 is going to reopen.
Yeah.
So basically, everything against Russia is finished.
Because Trump's idea is he wants to detach the Russians from China. So if he in his mind, and maybe you can see the logic, the big US-China confrontation is still the thing that shapes the 21st century.
Yeah.
And he would like to weaken the Chinese by detaching the Russians. And to be fair, I think there's a lot of nervousness in Moscow for a long time, because if you remember, during the Cold War, there was actually the occasional spat between, because you remember the Cold War because you're older than me, but there was the occasional spat between Russia and China. And so the sense of, yes, they're currently in bed together and the Chinese are providing a lot of support to Russia's economy, but they're so much bigger that it's a very uncomfortable relationship. The Chinese are definitely the bigger partner here.
Yeah.
So Trump's idea is make nice the Russians for however unpleasant this is. Yes, they get business deals in Russia, but if you can peel them away from China, it might help you if, God forbid, some kind of great power confrontation takes place between the US and China.
Julian has given me permission to short some BAE. So there we go. Short.
Where's the stop?
Just a small one, 500 shares at 16.48. Julian Musto, that is you. You and I are in that trade together. He says that it is the 200% Fibonacci extension at 16.50. So
It's too early on a Monday for Fibonacci extensions.
bit of Fibonacci, never hurt anyone. Let's see where we are then. BA Systems, I will put a target in of 2%, 32 pence, 16.16. I'm going to cover that. 16.17. We'll put on the limit there. So that's 16.17. Little trade going on in BAE there. Elsewhere, you'll see.
Well, where's your stop loss?
Where is my stop loss? That is, thank you, Axel. Yeah, yes, Dad.
Can you record it for him saying it in German? Because it's probably much scarier and much more dramatic.
There is your stop loss.
Not hello, hello German, proper German.
Let's go, I'll give myself 2% on the other side as well. So 32 is 81, 1681 stop loss there. Thank you, gents, for reminding me to be disciplined. Right, what else is happening this morning? Glencore, slightly higher. We've got Havas, 139.50. I've now got 30,000 of those. John Wood, John Wood's having a strong morning, actually. Somebody has had a discussion at the weekend, clearly, and thinks they know something there. Legal and General, 243, struggling to break out. I've got some gold. I am short a little bit of US 500. Oh, we got the WH Smith. So we got that WH Smith. We're in that at 1161. And then EasyJet has been a disaster, 499 in EasyJet. Good stuff. Right, Angeline is a very happy bunny because she is long the defence names. And fair shout, it's been a great call by her. So Angeline and R6 Senna are BAE winners.
Okay.
You can see why we're getting a women's takeover on Friday.
So this is how good they are at it. They know what they're doing, clearly.
Sir Chris Beecham, thank you so much for joining us this wonderful sunny morning.
It is a lovely day out there, actually. I got out the Moorgate station just about 6:30 and it wasn't pitch dark for the first time in months.
And why were you so late?
Because I was on the way to the station and the tyre pressure warning light came on. So there's me in the dark trying to...
and this is on your car or your wife's car?
In my car.
So we had you in overalls 2 weeks ago fixing your wife's
and this morning it was me, putting more air in the tyres because I'm not full of enough hot air already.
Good stuff.
She would say.
Right, thank you. Great to have you on.
Pleasure.
And that's us. Angeline will be with you in 3 minutes' time.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction, regular platform feature highlights, and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. Then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, good morning, trader friends! And it is a bright, sunny, and cold Monday, but we are joined by Matt Arbour to warm us all up here in the hot seat.
Morning, Ange.
Always such a pleasure getting you on. Everyone really excited that you're coming on because they want to talk about defence and how they're ripping higher. this
Well,
morning.
good Lord, yeah. After Rolls-Royce at the back end of last week with that fantastic pop high, and we continued this morning. BAE Systems leading the board in the FTSE. What, a 15% move when I looked just before I came over, with Rolls not too far behind.
Yeah.
So sort of the.
And you've been here, but you've been, all those unbelievers, Rich saying that Europe doesn't have the money, won't have the money to spend on defence. But as we thought,
Well, we all know in Europe they always find some money from the ECB's monetary policy fixes, don't they?
the printing presses.
Exactly. What was it? We'll play with our deficit rules to create more money to spend on defence. So we look.
Thin air. What is it that fancy word again for stealing from the future to fund today?
I'm not sure. I was going to say at some point Ursula von der Leyen will use that defence budget to kill some wolves to stop them picking on her ponies. But
Von der Leyen. Let's have a look at the defence board here. I'm going to try, and thank you very much. Phil is so intuitive.
Even Thales putting on 15%.
I know, right? And then keep a watch out, trader friends, for Elbit Systems. You've heard me talk about this before with Aaron Bright as well. Elbit's the one that behind the Iron Dome.
Okay.
The Karpat over there, but they have been in talks. They haven't given precise details, but they have been in talks with the Europeans to build something similar. Okay.
It's a bit of a logistical problem, isn't it?
Yes,
an iron dome over Tel Aviv and an iron dome over Europe.
Yeah, it's going. Please tell me it's not going to be protecting Brussels. I'm really not a fan of that city, which I've had to go to quite a bit because that's where I had to go to meet the likes of Barnier and all those people. It's not my favorite city, I have to say. But loads of comments out there from our very clever and engaged viewers this morning.
You're not capturing Rolls on that.
Yes, Rolls. Thank you for
list, of course, which has been, these stocks. Those who remember, everyone was trading Rolls-Royce during COVID, and that sort of moved down into the 80s, the 70s, and most people were very happy when they doubled their money. Coming out around 140, but now we're back. Pushing £8 again on Rolls-Royce.
I know, almost there, and it is heading higher. And I am hoping you are right. Actually, I have to put my hand up. Sachs and I were talking about coming off this on Friday. Sachs, it's a happy mistake. What's the word for happy mistake? Serendipity? No, that's something off by chance.
Yes.
Like meeting Matt. That's one of my top highlights this year or last year. But I got too busy. I think Sachs, did you take half off? I think away with the numbers, and our boys were telling you, maybe take some off if you're a bit concerned. I was also concerned by how high it got, but I got derailed on Friday. By Southwark Council. Tell you about that later. But I haven't done anything, so here we are, a happy mistake.
But it's an interesting one when you look at this chart, and this is the sort of the longer picture here, where Rolls it was a credit sort of problem. The fact that they take all their money from servicing contracts and getting that regular income, they were going to go bust. They were going to run out of money. And I think we've seen back in the long checkered history, we saw this on a stock like Rio Tinto back in 2008 with similarly, and I think if you look at a chart going back that far, where there was a genuine fear that this huge company and sort of fairly strategically important company across the world, can it actually run out of money? Is this a play? And the short sellers jump onto this and we get lots of momentum. And these are some of the stocks where we have seen these incredible turnarounds, where actually all it takes is to end that liquidity crisis, and the underlying business is very good.
It is remarkable.
I suppose you draw the analogy to something like Vodafone, where everyone's waited for this sort of rebound, and it never happened.
Are you saying that because you can see Rich peering in through the window?
Well, I know it's a popular stock. I know it's a popular stock with our traders and those people in the UK market.
It is indeed, and lots of people chiming in as well. Waka Waka saying Rolls-Royce has a lot going for it, but likely to drop if recession inbound. Maybe the modular power stations might help them.
Well, that's an interesting one, isn't it, with the modular power stations, because this has been bubbling around for almost 4 years, and let's not get political and talk about poor government policy, but the fact that the modular power stations are still going up to a tender process with 4 other companies. This was sort of Rolls proprietary technology, and we were going to go straight in with Rolls, and now it's not a done deal for Rolls.
What I find really interesting, have you ever lived in the tropics?
I've not lived in the tropics.
Are you familiar with the tropical cockroaches?
The tropical what?
Cockroaches.
Cockroaches, okay.
So cockroach eggs and the body of the cockroach.
Yeah.
There is a link with Rolls-Royce. I'm going to whack up this picture because it is true. For those of you that have lived in the tropics, Harry Nair, who is one of our trader friends who has got experience living in the tropics, I hope, because you've seen...
This is going to be a long circular segue into cockroaches and nuclear war. Is that where we're going? Is that the punchline?
No, we're not.
Okay.
Only cockroaches and Chinese left if there's nuclear war. No, I'm talking about the modular reactors, right? The modular reactors, whack up my chart here. They do look like the abdomen or the thorax, if I'm using the right word, of cockroaches, and also the eggs, if you like. Now, there is a reason for this. There are other contenders out there also building these modular reactors. And the reason for the shape is because they want to avoid the NIMBYs, and they truly believe that in the future, having something shiny, having something round is going... Can you see on the third picture there?
I can see, yeah.
Yeah, it's going to be less. Can you imagine this coming up, in your back garden, and you can see this thing? So what they're trying to make is something that is reflective and that doesn't look like a plant. Yes, it doesn't look like a nuclear power station. But it does look a bit bug-like. But also there are plans out there, if you follow space investing, that these modular, they're created for 2 reasons. So whenever I talk about trading here and picking stocks, to look for dual use. And Rolls-Royce and some of the other contenders in the space, GE being one of them, they are building these modular, whacked together small reactors. They are building them so that they are easy enough to put in place. For example, we need them on the moon, on Mars, places like that, right? And that cylindrical, shiny surface, they're trying to figure out whether they can be PVs so that they can recharge and provide, other energy uses for humans out there. Thank goodness at this age, I have no wish to be up there.
I think we're all going to have huge tokamak donuts in our garden as the dream of fusion comes
in. Oh my goodness me.
There we go.
Yeah, but back to Rolls-Royce. I mean, this is a comeback kid, right? I mean,
just truly, it's quite remarkable.
Not long ago, we were at the 7,
and the company was a basket case. So, and I can't pronounce his name. It's a Turkish guy. He came in from Arm Holdings and overseen this turnaround. It's just quite remarkable.
CEO, yes. It's a complicated Tufan.
Yeah.
Yeah. Ergin Biljik.
Exactly. That's the bit I can't pronounce. Tufan is in my repertoire.
Tufan. Let's have a look at some of the others. Trader friends, if you want to continue, let's whack up the chat for a bit because we've got a few other comments.
Well, of course, the other story this morning isn't it? It's we've got defence, and this is all Trump-led, of course. We've got defence, and then we've got Bitcoin with these sort of strange things. When you look on that weekend list on IG's site, just for a quick look, see, has crypto done anything odd this weekend? And suddenly you see Bitcoin was up 10% in 2 hours on Sunday.
Yeah.
On throwing out the words crypto reserve, which of course was the catnip behind the belief post-election that Trump was in favour of crypto, and he's kept this theme bubbling along that maybe we'll have crypto as a gold proxy out there, and this powers the the world of chat rooms and people who like to huddle or hodl or whatever they do. Hodl. Len hodl.
Love it. Always learn a new term when Matt Arber's on.
Yeah, but this belief that the Fed will start buying crypto, start buying Bitcoin, and that's why it will go to $500,000. But that story back out there, and after it was a bad week for Bitcoin holders last week, and
just
reminding good again.
Yeah, and reminding our trader friends of the action on Friday. I mean, it was wild, wasn't it? It looked as if we had huge buyers come in, just at the.
It sort of it tracked back high with the rally on late Friday evening in tech and in US indices in general, and then it's kind of continued it on these comments. So it'll be very interesting come 9 o'clock when those US crypto names open, everyone's favourite MicroStrategies, and see what the knock-on effect there is. Obviously, they kind of were slightly ahead of the move at the back end of last week. Didn't come off quite in lockstep with the sort of the general sell-off in Bitcoin itself.
Are you talking yourself into staying with me at 9 for the all sessions? I always love having you on. Yeah, I mean, just having a quick look. I too am really, really excited about 9. It's going to be very active today after the Friday that we've seen. Also, because everyone here that didn't catch Friday's action would have caught the crazy weekend, right? What happened with between Trump, Zelensky? I mean, it even was the talk of the town after a service on Sunday. I was like, can't get away from work, can't get away from politics, and now they're talking about this, at Sunday service as well. I mean, it's just remarkable. But reminder for those of you that did not catch this as well, obviously that crazy chat between Zelensky and Trump, but also it continues because there was a skit. Did you see the skit where Mike Myers, just whacking this up here?
Everyone was wondering what had happened to Mike Myers.
I know. Mike Myers crashing Trump-Zelensky meeting. This is a skit, by the way, waiting for this Curry's advert to end. I did time it just now, but we got so excited about defense stocks that Mike Myers comes in as Elon Musk. So he's acting as Elon Musk and then with a chainsaw and says,
Elon Musk, come have your meal.
Come have your meal, yeah. Saying, what are you doing in my office? Right, here we are, right? So the Trump-Ukraine meeting, and Elon Musk, you'll see in a moment, bursting forth at the back in this reenactment. There we are. Say, Trump, played by James Austin Johnson, introduces himself as the CEO of Gaza Hotel. So he looks really good, doesn't he, Mike Myers? I mean,
he does have a resemblance to Elon.
Yeah. And JD Vance, or rather the skit has JD Vance as well. I mean, what do you make of the
I kind of, the whole, it takes you back to that terrible scene in Scarface when you get the guy with the chainsaw in the shower and he thinks, it's chainsaws around people. Like, oh, no, it's too much.
It was also a great favourite amongst the Coen brothers. No, the Coen.
The Coen brothers.
Yeah.
It was less the sort of perception of uber violence than in Scarface. Yeah.
Swing Trader says this channel just loves to bash my American friends. Are you friends with Trump? I mean, tell us more, Swing Trader. Wow. Better be careful what we say. Swing Trader says 20k troops leaving Europe potentially. Also, Waka Waka chiming in. Waka Waka, I checked, it's big Shakira fan here.
Okay.
Saying many insider trades coming in on Friday, just before the close. 4 billion ETH trade, Ethereum. 40 times leverage. I think it's a fake out. Markets will resume the downtrend until Fed U-turns. What do you make of that?
I can't follow that quick spiel.
Let's whack up the comments. Let's whack up the chat here.
We're saying there was a large trade in the Ether 4 times lower, 40.
Yeah, 40 times leverage. I think it's a fake out.
I don't know what the Fed U-turn is that we're referring to. Fed U-turn on.
Yeah, Waka Waka Fed U-turn on what? Do you mean trying to cut rates sooner than thought? What is your point there? Please clarify for us. And I guess, lots and lots of analyst friends, fund manager friends from Asia messaging me this morning going, is Great Britain and Europe, are they gunning for a fight with the US? And my humble opinion is this is yet again the art of the deal.
Yes, indeed.
Right? By Trump. and he's going to create so much noise and so much confusion that literally no one will stand together when he waves that big stick called tariffs.
Well, or whether the stick actually gets waved. It's, again, as you've seen, it's the pervasive threat. No one's quite sure what it is that he wants. A key to him with tariffs, you can't just impose blanket tariffs. You do need to target these things as to where he wants to drive it. But as he wants to ensure that everyone knows that he has this stick to hold over people, I think is the game. But it's
Yeah.
When will the markets tire of this constant sort of bombast? It's great for a bit of volatility, but it's sort of flip-flopping everywhere almost. That the Canada, Mexico, will they, won't they, and then tariffs coming in, tariffs coming off.
It's interesting as well that we haven't seen gold climb higher. I would have expected it to push back up to that 2,900 level, but it hasn't really.
Gold was outperforming through the midsection of this, wasn't it? Gold was tracking relentlessly higher throughout everything, and has only just suffered the pullback. I suppose it's these psychological levels. $30,000 on gold, sort of. Hold on, bit of a pause. It wasn't really tracking fundamentals. What are gold fundamentals? Who knows? But that kind of belief that gold was continuing to go up at the same time as equities continue to go up, at the same time that rates are coming down. That's not standard gold behaviour. It was almost, I'll buy some equities and I'll buy some gold as a hedge, which it's sort of strange. It should be an either or. So gold has had this really good run, and part of that run, let's not forget, is this. And I'm going to come unstuck trying to explain exactly what went on. But there was a huge disconnect between spot price gold and futures price on gold. A delivery squeeze. There was an arbitrage opportunity there. Again, I don't know.
Oh, I like an arbitrage.
My knowledge of physical gold markets isn't what it should be, but that was responsible for a lot of that price action, or the move higher above 29 to 29.50 on gold futures that we saw.
No, I think you're right. I think you've got a good point there, because gold normally shines when we have all this tariff talk.
Shining, sparkle.
You can tell I had some sleep at the weekend. Yeah, these people want me hard here, but I did crash spectacularly on Saturday. You know that moment when you hit the snooze button, but you've actually slept through the snooze several times. Yeah, that was me. Gold normally shines when we've got this tariff situation, right? Higher tariffs. But it's been wobbling. It's been losing ground. It could be one of several things, as Matt was saying. We've had this huge run up already. Markets might have tired. There's this arbitrage situation between physical spot gold and also physical gold. But could it also be because we are now in that point where we've got some Trump fatigue already settling in for gold, so much noise, right? Everyone's kind of like zoned out maybe. But also the fact that it's...
Well, of course, we've still got Trump's threat to visit Fort Knox.
Oh, yes!
If the gold's actually there, don't we? Good Lord, what are we going to find?
I know, that would be amazing. Dun, 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 dun. And also, Musk was saying that he would lead, I think he mentioned he would lead that. And I think there was a report that many of his Twitter fans and his cult Musk followers saying, you need to live stream the event.
With this sort of jolly up, you think Trump, and it's in the most random place, isn't it, Fort Knox? I'm sure you can tell me it's in like a North Dakota or something, Fort Knox, in your... apologies to all those Americans who I'm going to offend. In one of these nondescript American states is where Fort Knox actually is. I'm sure you're going to tell me where Fort Knox actually is, and I'm going to be wrong.
I don't actually know where.
No one knows where Fort Knox is. It's in a nondescript American state, I believe. It's one of the sort of claims. I could be completely wrong.
I don't know. Trader friends, if you guys know where Fort Knox
quiz.
is.
Where is Fort Knox?
Where is Fort Knox? I mean, and is there going to be gold in there?
Anyhow, there we go. This sort of Jolly Boys weekend trip of Musk, Trump, and God knows who else to Fort Knox.
So the PCM said, and when they go in there, if it's live stream, there's going to be nothing in there but a note that says, I owe you.
Well, like the post Gordon Brown, like that whatever it was, there's nothing left,
Yeah.
or we spent it.
We spent it all. At which point it's going to be like, whoa. The US, I believe, owns roughly 8,000, just over 8,000 tons of gold, worth around, reports say around 700 to 800 billion dollars. But Trump said, if the gold, I think he reportedly said, if the gold isn't there, we're going to be very upset. I can't do his accent. I just cannot do his accent.
Well, of course, maybe we get, what was it, in the nickel storehouses where they'd painted the stones to look like nickel, and it was there, that wonderful scandal.
Yeah.
Who knows?
Who
Anyhow.
knows? If you guys know where Fort Knox is, please let me know. I don't know where Fort Knox is. Like, back to...
I don't think we're bashing the US either here. Come on.
Let's take a look at oil as well, because oil has been a really interesting one. It's still down. We talked about this last week, trader friends, but it's come out of that near-term trend channel that I drew last week. This has been, since pretty much the inauguration, been on a downward slide here. It had a bit of a sideways move early Feb, but then it started sliding lower again. What does the vol vibe tell us about oil?
I was going to say, oil's not been the most interesting of things to trade. It's not one that's been on my radar, given the action that has been elsewhere. Where we're getting a good bit of volatility back into tech stocks themselves. Gold has been interesting. Oil sort of, as you say, it's sort of traded downwards to sideways in what's been a bull market elsewhere.
Yeah, I think as the more confusion we have on the defense front, Zelensky war, Gaza. The more confusion, the more we're going to see a bearish run for oil continue, just because nothing's happening, just more confusion. Speaking of which, let's have a quick check on the stock markets here. Pretty much a flat looking vibe on Monday. Just let me zoom that in for you. Right, do you want to take us through that, Matt?
Yeah, so US, this has been like a very quiet Monday morning. Monday mornings we've been seeing some decent moves in Asia last 3 or 4 weeks, and Asia was pretty flat overnight, and we've seen that reflect in the US. Obviously, London strong with the defence led by BAE and Rolls. Germany. I'm just consistently amazed at the resilience of the DAX. It sort of defies gravity onwards and upwards there. Yeah. But yeah, nothing really going yet. I think, as is often the case, we'll see some activity on the open of all sessions, and then the moves. And this has been quite pronounced, that some of the reversals almost that we see when the US cash has been opening, some really sharp moves on the names in focus. We saw it on Nvidia at the end of last week, which didn't really do a great deal in the all sessions, in the morning part of all sessions.
Yeah,
and
all the action was
Yeah, once the cash opened, and we saw we saw it come off fairly aggressively into the back end of last week.
This just brings to the fore the period we're in right now. Trade the fact, not the rumor, right? Trade the fact.
Well, and also, it's I think we talked about it last week with the noise that we've been getting on the earnings. And Nvidia, the first move was lower on earnings, then we trended higher and sort of trended higher and higher and higher, and then come the end of the week, we're all the way back low. It's almost the dust settles, and strangely, the first reaction was right. That gut reaction on the results. These aren't blowout results. There's nothing new here, and that has been the case. We saw the same on Coinbase.
Yeah.
Similarly, like the first move was the good move.
Well, I'm being told that Aaron Bright is already lining up outside, wants to do the all session. So we might be. We've got, I think, 2 more minutes. Is that right, guys? 2 more minutes. One more minute. Let's have a look at Coinbase there. Yeah, it's really, this is the daily chart there, people. It's come off.
Yeah, we can see that little spike that was the result. That sort of a candlestick in the middle. That's post results, and it's been sort of trending. So before the recent downtrend.
Trending lower there. That's
yeah, it's been trending low, and Coinbase is slightly interesting in that it's held up as a crypto stock with a high beta to Bitcoin, but it's actually the disconnect is there at the moment. It doesn't really track underlying crypto in the same way that it perhaps used to in the past. Okay, it's a mature kind of business. It makes its money like exchanges do from trading revenue, and probably at some point in the future from selling data. So should it really matter where Bitcoin is? Obviously, the volatility of Bitcoin is the underlying thing there for Coinbase rather than the direction.
Yeah. So 30 seconds to go. What's the rest of your day looking like? Also, just keeping a firm eye on markets there, because I'm laughing at some of my friends from the city who are kind of messaging in saying, "Oh, risk is back on," but it doesn't actually look to me.
It doesn't look like risk is back on. What were they looking at on Friday? I don't.
Looking at the chart now, it does not look like risk is back on. It just looks like more confusion. Matt, your one word for the rest of today. One, if you had to pick one to describe what it's going to be like for you. Come on, quick word.
Single word.
Everyone's waiting. Come on.
I don't know.
Wild, meh.
I don't think it's going to be wild. I don't think it's going to be, I think we have
drum roll, even to drum roll. Pick one word. Come on.
Cold.
There you go. On that note, thank you very much. Always a pleasure having you on.
Thank you, Ange.
Welcome you back tomorrow.
Cheers. Goodbye.
Cheers. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey people, welcome back, and I'm so excited because not only have we got Aaron Bright with us, but in a few seconds we will have all sessions. Welcome to the show, Aaron.
Thank you very much. Delighted to be here.
How was your weekend? Quickly, as I get all sessions up.
Yeah, good. Good. Quite relaxing.
Kickboxing.
There was
Lift my foot up.
there was a fair amount of kickboxing. Good fun. Good fun. I'm learning new techniques, so hopefully I never need to use them, but it's always good to know.
10 seconds, right? I'm being told to raise the bell. Do we have a bell? Okay, go! Right, all sessions are up, people, and I am going to put the winners list, or actually the winners list up first. Where we go. Can you see, Aaron?
Yes, we've got, well, the Russell 2000 is up 3.7%.
Whoa.
Plug Power.
Yeah.
I made a mess of that last time I tried to pronounce that. 0.62%. Virgin Galactic also up 0.5%. Reddit up 0.3%. Lululemon up 0.1% today. Nice.
And also, I guess the other thing is we had a trader friend earlier asking about rotation, whether we're still seeing, this rotation into the smaller caps from the big caps.
Well, we did see actually a little bit of a hit. I think the Russell has had a bit of a hit, but we added it to our portfolios, I think, around the time Donald Trump got elected, in and around that time, I think just before. So we got a nice rally from that, because you do want to broaden out from the Mag 7. There's always a concern when you have an index and it becomes very heavily concentrated that you're at the behest of 7 stocks. If you've got the index, which is 40% of it is made up of 7 stocks, it's not as diversified as it once was. So you need to look for other sources of diversification if you want really good, risk-adjusted returns, or to really ensure your risk management is sound. So yeah, really interesting play that, but it's taken a little bit of a hit, unfortunately.
Yeah. AST Space Mobile, interesting to see this on the winners list there.
Yeah.
They are the ones that design satellites and they manufacture some of the parts that's building the Space Mobile satellite constellation. Interesting, it normally isn't up there. But let's have a look at the losers as well.
Berkshire Hathaway down 3.1%. Chipotle is down 3%. Salesforce down around 0.5%. Ford down 0.4%, and also Coinbase down just under 0.4% too.
Yeah, no surprise there given the huge amount of volatility later on Friday, right?
Yeah.
Did you see the action?
Yeah. I mean, the S&P was up in the end, and I think we're now just positive for the year for the S&P, or we might still be, because it did. We obviously were up around 3-4% for the year to date S&P 500, then it dipped below that. And I think because of the gains on Friday, we might be either flat or just positive for the year for the index, which is significantly underperforming the FTSE 100, which is a very rare statement, one can say.
Yeah, totally. Especially in a week when we've had Nvidia, bit of a judder there because its earnings didn't.
And they weren't even bad. They were good earnings.
They weren't bad, but the share price was just a bit meh after.
Yeah, I mean, to sort of reiterate what we sort of discussed on Friday for those who weren't watching, you now Nvidia fans and investors expecting like incredible gains rather than just decent gains for the stock price to sort of rally, which is sort of the world we're in. We're at sort of we were, I guess, a sort of peak optimism, but I don't know if you follow the CNN Fear and Greed Index.
Yes.
But that's now showing quite a fearful gauge. So it looks at various different things like option demand, trading volume, all things like that, and it shows that there is a bit of a fearful sentiment for investors.
Yeah. Speaking of Berkshire Hathaway, it's also interesting that it's gain slightly. The all sessions that we have here on the IG platform is all sessions is B. I'm being told I've got some tech issue. I will whack that up in a moment. They're going to try and fix that right now. But we are actually it's interesting because it did have record numbers. And Buffett reported its highest ever quarterly profit recently due to improvement in insurance operations. But we talked about this quite a bit, right? Still a huge amount held in cash. doubled, I think, in 2024. We're going to see this cash holding maintained going forward, do you think?
Well, we know what Buffett is like when it comes to investing. He likes to invest when, I think, quote unquote, there is blood on the street. So when there's a dislocation from one's intrinsic value when looking at equity prices. So I think that the broad consensus is that markets, I mean, obviously they've had a little bit of a pullback, but they are obviously at highs. That equities are relatively expensive. So I would expect the cash to be deployed when Buffett and his associates see sort of applicable opportunities where he sees that dislocation from the stock's intrinsic value when he can buy it in at a discount.
Yeah, we're just going to have to go to break really quickly just so that the tech ops can have a quick look. But hold that thought. We'll be right back.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG. Hey, welcome back. We have a brilliant tech crew here, Terence and Phil, rushing in to kind of check the Wi-Fi. Let's go through the all sessions once again, just to make sure we've got belt and braces. Right, here we go.
So MicroStrategy up 11.1%. Mara Holdings up 8.6%, Right Blockchain up 8.5%, Chipotle up 2.5%, and Trump Media and Technology Group up just over 2%.
All right, and also let's have a look at the losers list here.
NEO is down 2.4%, JD down 2.3%, Nvidia is also down just shy of 1%, and McDonald's down 0.4%.
Yeah, it's going to be an interesting week as well because we've got Broadcom and we've got Costco as well coming up this week. Lots of retail names as well. Are you watching out for anyone specifically?
Well, I think Costco is quite an interesting one to look for. I guess it does, to an extent, show to an extent, consumer strength, shows what they're buying, shows if they're taking advantage of some good deals you get in Costco. And also looking at their subscription membership numbers is always quite an interesting one, because obviously Costco's business model is you pay that membership fee to sort of get hold of some of their good deals. So really interesting to see if consumers are considering cutting back on their membership fees, looking at other grocery stores in the States and beyond, or they're continuing, or even memberships are increasing.
Let's have a look at the client sentiment here. So 94% long, 6% have short positions. Just a gentle reminder, this is, of course, a reflection of the IG client universe, not the overall, does not capture other funds or other fund managers. Let's have a look at the fundamentals as well. Just a reminder, trader friends, Costco is out, its earnings out after Thursday's close. Its market cap just over $465 billion there.
It's got quite a high PE, I'd say.
Yeah, it's quite punchy, isn't it? At 63 there, quite punchy. And tip ranks, do you ever use tip ranks?
A little bit. I sort of look at what they say in terms of their stocks, stock recommendations for sure. I do give it a little browse.
Yeah, some people out there saying that, Costco on a chart, let's just have the daily chart, whacking up the daily view for you here. Many who trade this perhaps saying that it's been rising, right? It's been on a tear for some time. Surely it can't keep the momentum going. Just a reminder, shares up around 14% so far this year after rising almost 40% in 2024, up 18% since the November 5th election. Can it continue going north?
Well, it's all dependent on their earnings, right? And dependent on, I guess, to an extent, the strength of the US economy. But I guess with Costco's business model, because they are a wholesale business, to an extent that there is an element of defense there. People are always going to need groceries. They're always going to, need their eggs and their protein powder or whatnot, whatever random stuff you can buy in Costco. So, yeah, I think that.
Random protein powder.
Yeah, no, it's just because the last time I was there was an aisle, and it just made me think that there's this huge aisle of these like ridiculous sized tubs of protein powder and protein bars. So, yeah, it just made me think of that. But in all seriousness, there's an awful lot of stuff which people are always going to consistently need there.
Yeah. Do you remember the Whole Foods? Whack it up now because I'm going to see whether I can find it, Phil. So put us on camera. Oh, the Whole Foods was it protein water that they were trying to sell, and literally it was kind of chicken breasts that were cooked and soaked in water. Was it Whole Foods? It was crazy. Chicken breasts. Do you remember this?
I don't know.
Soaked in water, and they were trying to sell it for quite a bit of money. No. This is just trying to find some weird thing that they have over there, which was quite fascinating actually. So Costco's one. They are looking out, or rather, the market is looking out for $1.51 a share in Q1. And the revenue estimate, $14.6 billion. If it does achieve that number, it'd be up 22%. Have a go, Broadcom, one that is in the Aaron Bright view as well.
Yeah, I mean, it's as I said, when we're allocating across the smart portfolios, we don't allocate on a stock-specific basis, but we do keep a broad view on what large equities such as Costco, Broadcom, Nvidia are all doing. So not something that we specifically buy, but always good to get an idea of what various sectors and large companies in the States are doing in particular.
Take us through the client sentiment.
So we're 86% long for Broadcom, and if we look at the last hour, 100% buys today, 100% buys this week, 100% buys in this month, 100% buys. Yeah,
interesting. And also Broadcom, another big one that's out after Thursday's close. Market cap around 943, but here is the earnings estimate, $1.51 a share.
Very large PE ratio.
Yeah, wow, that is quite high, 131 almost. And the sales estimate around 14.6 billion. Let's talk about macro, because we've got tons on the macro front as well.
Yeah, absolutely.
Not the elephant in the room, of course, being non-farm payrolls. What is your expectation?
Interesting to see. I think whenever anyone seems to make predictions for this, they sometimes go sour. So I'll be careful here. But
strangely, whenever there's a prize involved and Rich puts forward the prize, he then wins the prize.
Oh, really?
Or actually, we tested this earlier on, and it was indeed, he did get the right number. So maybe he's got a private telephone line.
We've seen a little bit of softening in US data. So whether that continues into US employment market is yet to be seen. But I wouldn't be surprised if we do see a bit of a wobbly figure. That's how I describe it. A bit of a, maybe not something catastrophic, but something which is not the most impressive. I wouldn't be surprised, but then again, we know how much non-farms payroll figures can surprise both on the upside and the downside. So I think that given what we've seen from the past couple of months and the volatility we've seen in particular equity and bond markets, I wouldn't be surprised if we get bouts of volatility on Friday in response to this data, both if it's really, really strong data or if it comes in weaker. So definitely an interesting one to be sort of allocating around.
We had a question earlier from one of our viewer friends about why non-farm and all that. Well, the entire market trades it, right? It moves markets, loads of volume there, volatility, and so that's why everyone watches and trades.
And it just, in my opinion, and I think many others' opinion, it really shows the backbone of the US economy and how that's functioning, whether it's growing or whether it's weakening, and is it primed for a collapse. So it's a very important data point.
Yeah. And it is also, although it's backward looking, many see it as a precursor, right? It kind of like gives you a bird's eye view of what might come in the months ahead. Traders looking out for 156,000 jobs added, and that would be above, if we get that 156K number, that would be above the 143,000 added in January. Everyone also watches the revisions, right?
That's hugely important because this figure is very difficult to get bang on when you're calculating it on data, which has only been released in sort of the past week for these analysts who are looking at it.
Let's have a quick look as well at the dollar, because the dollar has been, let's have a look at the dollar basket first for you there. It has really been softening since pretty much the inauguration. But also now, I mean, aren't we now pricing, and I was hearing Chris talk about this earlier, potentially maybe even a pause as soon as the summer. And now there's this whole kind of resurgence, if you like, of, perhaps some weakness in the US economy ahead. Whereas if we were talking like this at the back end before Christmas, we were all thinking that, it was going to do really, really well. And potentially we could even see rates have to go up to stem inflation. Now we're kind of like on the reverse again.
Yeah, absolutely. And I think you can see it quite clearly with how the dollar is valued there. As you sort of alluded to, Ange, any sort of weakening in the US economy is likely to be met by rate cuts, given that inflation's at a much more sustainable level now. Not the perfect level, but it's at a good level, I would say, relative to where we've been. So I think that you can really clearly see that in the data. And I think investors potentially will look more towards getting cuts than certainly than hikes.
Some messages coming through right now from our trader friends. So let's just have a look at so much engagement today. I'm having to actually, I know it's like wall to wall here. Some people, Waka Waka, saying I only trade 3-minute charts. Do you have a personal view on I know yours is a longer term view, but Martin, for example, says he doesn't look at anything that is shorter than he doesn't like minute, or he doesn't like intraday so much.
Well, I'll give you a clue on that. I think my shortest position I've ever held has been about 3 or 4 years. So I'm very long term when it comes to investing, and I tend to buy cash equities. So.
Yeah, which is good, especially if you have a longer term view.
Yeah.
Time and time again, we've seen statistics. They don't play around with it too much. We've got Mango, Nvidia, saying Nvidia went down because someone sold 30 million of shares. Nothing for the company value, but rabbits started selling. There was indeed a fear, right? Let's just put that chart back up. To show them, what happened, and this is the daily chart there. Those of you that were there during the earnings when it happened, you can definitely see a huge head fake initially after the results, and then it kind of slid a bit higher, then it went lower again, and now it's around that 12354 handle there. Nvidia still has the moat though. What are your thoughts on Nvidia?
Yeah, I mean, a really, really strong business, got a great business model. And yeah, I mean, the earnings are strong. I do agree. I think it's certainly got a good moat. But I don't think it's an unbreachable industry. So it's a case of watching this space, seeing if others can do it, see if others can do it for cheaper as well. And yeah, interesting area to watch. I think what we spoke about, I think it was about a year ago, was chip manufacturing, and if there's any tensions in Taiwan and that region. So that's obviously an area which is I think Nvidia and Nvidia investors also should keep an eye on, given Taiwan's importance in the semiconductor industry.
Mango also saying that trades, or she trades, whichever you are, please let me know, Mango. The monthly, please let us know how you use and how you trade the monthly candles. That would be really fascinating for those of us that, trade other time frames. I know Adam DeLuz is a big fan of 10-minute as well. I quite like zooming in from a bigger time frame. So monthly, weekly, and then drill down to 10 minutes. Let's have a look at some of the macro as well, other than, of course, that elephant in the room, non-farms. We also have the drama of tariffs. We've also got the drama, that's 25% from Mexico and Canada this week. China looking to start paying that additional 10%, right?
Yeah. So really important area in terms of looking at inflation and looking at the strength of economies, and in terms of how it's going to affect various consumers across the world. So really important to see where this is going. And I think there's obviously, markets are pricing in concerns around that.
We've also got March 4th is the 2 sessions in China where they set out their plans for the coming year. Of course, we've got Trump and Zelensky as well.
Yes, that was box office stuff on Friday.
Oh my goodness me! Yeah, did you watch all of it?
I did, yes.
It was really disturbing.
It was an interesting. I think this sort of thing is most likely to happen behind closed doors usually, and I wouldn't be surprised if when global leaders come together, it is a bit like that. But it's quite strange to see it out in the open. But look, it's interesting development, and we have to just wait and see what happens.
Yeah. It's remarkable for me because I have been in those instances where it is a closed room discussion and Chatham House rules. So you can watch what's going on, but you can't really say anything about it after you exit the room. But they almost go through this, if it's to do with tariffs, if it's to do anything, they almost go through we're meant to be talking about tariffs, yes, tick. We're meant to be talking about climate change, tick. And we're meant to be talking about security, tick. And then they almost throw the hymn sheet away. Right, and their advisors are next to them, their interpreters are next to them, and they've gone, we've done it. Now let's talk about what we actually want to talk about. And this felt like it was just all out.
It was, yeah. Really interesting.
Yeah. Laundry, dirty linen.
And what this means for the Ukraine war, we'll have to wait and see. I think Trump is keen to obviously end it. He's made that very clear, that he wants to have some sort of deal with Russia, and likely to see Ukraine give up some of their territory.
But yet lacking in details, and we haven't seen any more from that agreement over ceasefire for a mineral-related deal.
Obviously Zelensky wants to reclaim all the lost territory, so it's going to be interesting to see how this goes. Whether there's going to be a ceasefire, whether there's going to be military aid from Europe and the US is going to continue. Very much a case of wait and see, because I think Friday gave us, I think we're all more confused after Friday in terms of the outcome of the Ukraine war.
And, to reiterate and underpin what, Aaron and Matt Arbour saying, clearly, don't take our word for it. Look at the markets. I mean, after, what we saw on the Oval Office, that heated discussion like never before, we are still seeing relative calm here, whacking up my chart here of, the Forex markets, relative calm, but also taking a look at the indices here as well. We're now 9:23 London time, putting that out there in case you're watching from elsewhere. But, got Germany 40 up, actually. Oh, my goodness. And we're starting to see, in fact, not just calm, but
positivity.
Positivity shining through now. Perhaps it's Aaron talking in your calm, dulcet tones. Speaking of which, Aaron is like our secret Top Gun character here. You want to talk about defense?
Yeah, of course. Always keen to talk about defense. So obviously were discussing before we went on air that we were delighted to see BAE Systems take a nice pop this morning. So it was up, was it 15%?
Yeah, and it's still holding that 15% there, doing really well.
So drinks are on you, Andrew.
And RSACs, RSACs as well. I have that handy arrow there just to show when I diversified, took half off my NVIDIA and put it into things like BAE Systems, and just also having a look at the wider space, because I have put them into different watch lists because they tend to move together. Defense is a bit like luxury, and what happens with the European defense stocks tends to be what happens with the US a bit later on. And so here we are, Rheinmetall, Richie Rich's girlfriend will be very happy about that. Look at that, 11.7%.
Wow.
Sold up 21%. That is the stock. Wow. Yeah, BAE, we've already done BAE. Coming back off a bit, but still holding at 15% there. Hensel, the one that many fund managers in the city have but don't talk about it, up 21.7% there. Kinetic and Thales as well. I'm going to show you as well the US defense watch list to show you kind of why I've broken it out. Yeah, and then I've been warned by Phil, and this will be the last thing I show you. Because, Boeing is up slightly, but pay attention to the ones that are not all sessions on the IG platform.
Yeah, it'll be interesting to see how they move later in the day, for sure.
Yeah, the Lockheed Northrop Grumman, the big one, big defense name in the US, and of course, General Dynamics. And on that note, how's the rest of your day looking, Aaron?
Yeah, meetings, looking at markets, and just various bits of monthly reporting, because we're now into March already.
Yeah, I can't believe it, right? March the 3rd.
I know, crazy stuff.
Stay where you are, everyone. We will be right back with Market Measures.
Thank you.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Right, everybody, welcome back to Market Measures. So, wow, it's all kicking off in the chat. First of all, we had 100 viewers live at 12 minutes past 8 this morning. That is a new record. So, very, very happy. However, one of them, we've angered him. Swing traitor, I do apologise that you thought that we were being anti-American. Absolutely not. We absolutely love America. However, JD Vance is the biggest buffoon that I've ever seen in my life. Vance, your vice president, is a disgrace. A buffoon, just in case that's an English term, a person who is foolish or ridiculous, or who acts in a foolish or ridiculous way. Friday night was an embarrassment to your nation, and JD Vance was guilty. So, apologies, but it's definitely not an anti-American rant. We love America. We think your vice president's an idiot. Let's move on to market measures. So, we're going to look today at a summary of our beginner's course to options, right? We've gone right back to the start. We want to really build up your knowledge of options and derivatives. So, we've done 8 lessons so far. I'd like to go back and review the first 4 today. We'll review the second 4 tomorrow. So we'll go straight into understanding call options. I'm just going to do the last slide, because the last slide, Sahil always gives us this wonderful takeaway and everything you needed to know from the lesson. So buying a call option allows you to buy, purchase, or call towards you 100 shares of stock at the strike price you choose. Alternatively, selling a call option enables you to bet against the movement of a stock, but exposes you to an undefined risk to the upside and the obligation to short 100 shares if the stock price is above your strike at expiration. Okay, so if I wanted to buy the upside in Nvidia, I would purchase a $130 call option at this moment in time. Right? The stock's trading at 124. I'd buy a 130 call. If I didn't think that Nvidia was going to go up through 130, I could sell a call there. Right? Because if I'd be happy being short, then as the stock rises above, it goes to 132, 133, if I'm short that $130 call, that means that somebody calls the stock from me, and either I've got it and I give it to them, so I sell my stock at 130, or if I don't have it, I have to borrow it and I have to give it to them. Okay? So that's buying a call option or selling a call. At expiration, long call holders are profitable if the stock price has moved up past the strike price, right? So if it finishes at 132 and I'm long a $130 call, I make money. Well, it depends how much I paid for the option, but has moved up past the strike price plus the premium paid for the option. So if I paid $1 for that $130 call, right, at 132, I'm in the profit. If I paid $3 for it, I've still lost money, but only $1. At expiration, short call holders are profitable if the stock price is below their strike price. Okay, or above the strike price by less than the credit received for selling the option. So if I sold the option at $3, then the stock can go up through 130, right? And it can go to 132, and I've still made money. This is what I love about selling options, is you can be wrong in the direction. You can be wrong of how much it goes against you, but you can still make money. Now, put options. What happens on the converse, right? So you can buy or sell a call. You can buy or sell a put. So being long a put contract allows you to sell 100 shares of stock at the strike price you've chosen. Long put contracts, and that's where people get confused, right? That's the bit. If you get over the fact that you can be long puts or short puts, right? The confusing bit is a long a put and short a call, because you're like, but I'm short something that the stock goes up, or I'm long something that the stock goes down, right? Long puts and short calls are the most difficult thing to get your head around. But long puts are profitable at expiration if the stock price is below the strike price chosen by more than the premium paid. Let's look at an example of that. Nvidia is now trading at 124. If I buy a $120 put, I have the right to put my stock onto somebody else at $120 at the date of expiry chosen. Right? So I'm long a $120 put. If I've paid $2 for that, the stock needs to go down to 118 before I'm profitable. okay, because I've paid 2% for the right to do it. If you buy car insurance, you pay a premium. Okay, so if my car is worth £20,000 and I buy a put option, I buy car insurance, right? Then if I crash it, then you've normally got that excess, right? The excess on a £20,000 car could be £2,000. That takes it down to 18,000 that you will get back from the insurance company if you completely write this car off. But you've also paid 1,000 for insurance. So that means your net profit, it's not really a profit because you've crashed your car. Hopefully you're all right at this stage, you're not hurt. But your net return is 17,000 because you've got the 2,000 of excess and the 1,000 of premium you've paid, right? So if I'm long Nvidia stock at $124 today, and I pay $2 for the $120 insurance premium, insurance contract, then at 118 is where you'll actually get the cash, right? 118 is where you're out. That's your break even. Now, conversely, being short a put contract, so selling that right to somebody else to put stock on you, right? So I'm saying I'm writing the car insurance. I'm the insurance company this time. I say, if you crash your car, I will give you the money back, right? Being short a put contract obligates you to buy or be put 100 shares of stock at the strike price I've chosen if the stock is below that strike at expiration. So that allows you to bet against the movement of the stock, but exposes you to undefined risk on the downside down to zero. It's not really undefined because it can go to zero, and that's you sorted. Short put contracts are 100% profitable if the stock price is above the strike price at expiration, right? So if Nvidia drops to $121, all that premium's mine at expiry. Right, takeaways, intrinsic value and extrinsic value. So this is what we are looking at, more value of the options, right? So we've looked at what is a put, what is a call. Now we're looking at the value of the option. The intrinsic value is the real worth of an option at expiration, with call options gaining intrinsic value when the stock price exceeds the strike price, and put options when the stock price is below the strike price. Extrinsic value, right, is the harder bit to get your mind round. That's the additional worth based on time until expiration and the market expectations of volatility, which increases more with time and higher volatility, right? So extrinsic value goes up the more volatile things are and the longer you've got until expiry. The option premium is composed of intrinsic and extrinsic values, and extrinsic value is found by subtracting intrinsic value from the total premium. Okay, so if the stock is trading at 118 and you've got the $120 put, that is $2 of intrinsic value because the stock underlying price is $2 below the strike price. Nvidia is trading at $124 now. Therefore, the $120 put has no intrinsic value, zero, because the stock is trading above it. The $130 call in Nvidia has zero intrinsic value at this moment in time. It's all extrinsic. The option premium, yeah, that's just covered that one. Right, now, moneyness, Moneyball. In the money, out the money, and at the money. That is your three terms to learn from this one. ITM, OTM, ATM. If it's in the money, that means that at expiry, then you would be delivered upon. If it's out of the money, then options are worthless when it comes to expiry. And if it's at the money, then it's really tricky because you could be getting stock or having to deliver stock just on that last tick. But those go for throughout the life of the option, whether it's ITM, OTM, ATM. It puts context around the strike price relative to the stock price. In the money options represent options that can be exercised, as those options would have real intrinsic value at expiration, right? So this is where it's starting to put all these terms together. Out the money options represent options that would not be exercised, as those options would not have real intrinsic value at expiration. Being in the money is a good thing for long options, while being out of the money is a good thing for short options. And at the money options are just the closest options to the stock price. They generally have the highest amount of extrinsic value, right? That's really important. At the money options are the ones that are right there where the underlying price is. That's the at the money option, the one that's closest. They generally have the highest amount of extrinsic value due to the uncertainty and whether or not they'll be in the money or out the money, right? It's always moving. That's a real fun one to keep track of. Okay, we've got just a really quick, Sahil's been great. He's done this slide for us along with his usual weekly update. Here's your results for the week. We've got Target, Best Buy tomorrow, CrowdStrike, remember that one? CrowdStrike after the close, Abercrombie before market open. I've got a position in that one. Foot Locker will of course move, Nike, JD.com and Macy's before the market on Thursday, and then it's Broadcom. That's the biggest one of the week. Broadcom on Thursday along with Costco and Gap. That's market measures for today. Join Angeline after the break with Aisha.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG. Covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
I'm Ben Hemmingson and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, welcome to Trader Tools with myself and Aisha Anderson. Thank you so much for coming on the show.
Me.
It's so exciting having another female here.
It's good to be back. I like coming on.
Brilliant. Because it is a special week here at IG. It's International Women's Day coming up. I'm launching a takeover, female takeover, this Saturday. Yeah, the directors don't know this yet on Friday, but Rich is heading off to Bristol. He'll be patching in, but I will have a full line up on Friday. No, you guys can't go on holiday, I'm telling me. Directors in there who are now getting very excited. So let's kick off first with what's cooking here at IG.
Yeah, I mean, International Women's Day is always a big deal for us. We are, of course, no surprise, quite a male-dominated industry in kind of financial services. So we're trying to do our women's network. It's called Inspire IG, and the team there are wonderful and are looking for ways to kind of create some dialogue around this year's theme, which is Accelerate Action. And of course, we're a global business, so we have things going on across the board, in Australia, South Africa, Japan, Germany. A lot of our markets are hosting stuff. So we've got a range of things happening. Quite interestingly enough, we had like a poker kind of training event in the last couple of days, where somebody came in and talked to us about how to play poker, but also how that applies to relationships in the business, planning, negotiating, strategizing. So that's a really interesting take. We've got a piece around how to get most out of ourselves in terms of accelerating action. What does that mean for us, for our allies, for example? In Japan, actually, interestingly enough, we're talking about a gender health workshop, understanding the body's journey. So lots of stuff going on across IG, across the different markets, range of different topics, fertility, a panel discussion with pizza and drinks.
Oh, it's in when there's pizza.
Pizza and drinks. Yeah. Always a winner. Always a winner.
Of course, you know a great deal about being a woman in this extremely challenging space. As head of customer engagement here at IG, Aisha is looking very, very strong. I need to have whatever vitamins you're having here.
Vitamin D all the way. Sunshine.
Sunshine. Give us a heads up. as to what we are, working on to help our female traders, and also to, give them more access. I always say to our female traders that I love the fact that we can automate. I love the fact that we can put in trailing stops. We can ensure that we have the guardrails in place so that we have busy lives, right? We can't be sat in front of screens the whole time. So what are these exciting new things coming up? Give us a heads up.
Well, yeah, I mean, look, like you said, a lot of the stuff that we're working on is around understanding how clients use the platform, how they trade, how they invest, right? And everybody does things differently. A lot of the stuff that we do requires you to sit at your desk with your computer, perhaps your mobile phone, kind of checking the markets quite a lot. So you've mentioned a few things there. In the platform that will help, means that you can kind of set kind of stops and limits to ensure that you're not having to sit there whilst perhaps dealing with
clear parameters.
Life, right? Exactly. So there are the features in the app. I mean, of course, it applies to everybody, not just women, but that's another thing that that you can be thinking through. We're also really keen to kind of make trading and investments more accessible, right? And so we are hosting a number of kind of events with our female clients, for example, building a bit of a network and a community, just to kind of create those safe spaces for conversations, for inspiration. So I think that's brilliant. So our events team are hosting that. I attend one every so often. So I'm looking forward, hopefully, to seeing some of you guys there in the coming weeks. But also, we are looking at understanding how our clients, both male and female, use the platform, what they're interested in investing into, how they trade, etc. Motivations. Do you want to make money quick? Do you want to invest for the future? And we're using that to shape the kinds of products that we're delivering. I think I talked about this last time that I was on. IG Invest, for me, is a really interesting product, particularly in this space where myself, as a mother, I know I don't have enough time, working mother, all the stuff, sports athlete, professional, I don't have
5
all the
days
time.
a week here, people.
All the time, in fact, 24/7. Actually, IG Invest is something that we've launched recently, and it's just a nice, kind of easy way to get into investing if it's something that's new to you. If you're not used to trading, if you're not too keen to put, a lot of, I guess, leverage on, you don't want to be sitting at your computer, IG Invest is a really great way to start. It's for developing investors, and we think actually this is something that will appeal not just to women, but also to, a wider demographic of people who are interested in managing their money. So, for us, it's all about making trading and investing really, really accessible. And you've just got up here, actually, the ready-made portfolios that launched last week.
Yes, which
I think Marcus was on.
Yes, he was on with me. And I think this is absolutely, spot on. It will cover a market out there. And many of you watching this right now, there's 3 simple options to choose from. If you missed Marcus's interview with me last Friday, he helpfully explained how if you want stuff bundled for you, people, you don't have the time, but you still want to take part, there are already 3 bundles that you can easily choose from. Cautious, measured, courageous, and it helpfully with those, I love those circles. I call them circles. Some people call them
donuts, pie charts,
donuts.
Yeah.
But it tells you very clearly, in a simple sort of easy on the eye format, what the mix is.
Yeah, and you know what? I think this is really, really useful for people who are coming in. Like, I kind of recommended to my friends and family to come in and just try investing, right? So you've probably heard there's been a lot of talk in the papers and the news recently about getting, the British public to invest like the Americans do, right, in kind of stocks and shares. And I've been trying to get my friends and family to do this. And quite often they'll log in and they'll go, I have no idea where to start. What do I invest in? I don't want to lose money. And I think having those ready-made portfolios is a nice, easy step for them. Somebody who is experienced, knows the markets, is choosing a bundle of stocks and shares that they can easily invest in whilst they get used to understanding the markets and fundamentals and how to pick and choose shares. So really, really great opportunity there. And we're looking forward to seeing how that takes the market in the next few weeks.
What's also brilliant about this is it gives you a good springboard into our other products, right? So you can also move from this, and then, you know, once you gain more confidence, move on to self-selecting. What I like about the IG Invest product as well, is that you can choose yourself, right, from 13,000 global stocks. That is an impressive selection there. And ETFs as well. Those of you that, you know, like the sector, for example, you do like the defense sector, but you're not so au fait with each individual, right, stock. You want a buffet of defense instruments. Well, then maybe ETFs is your thing.
Yeah, and we've made it really easy in IG Invest as well with kind of thematic groupings. So if you're interested in, you know, renewables or interested in AI, we've already got those kind of buckets ready made to explore in ETFs. So yeah, really, really fantastic way to get started.
Brilliant. And we've got a couple minutes left. Just tell us a summary, because lots of people watching will go, oh my goodness, how does she do it? How does Aisha do it? You know, full-time job. Whoa, that's the sound here. Everyone's going, whoa. You know, with a full-time job, you know, she's also a mom. You know, she also has time to, you know, take a look at investing and all this good stuff that you do here. I actually don't know how you do it. But, you know, what is your day-to-day? Give us a sense of your day-to-day here.
Gosh, yeah. Well, I mean, my day... no 2 days are ever the same, quite frankly, right? But what is always consistent is waking up in the morning and getting them kids out of the door. That is the key thing. So get them dressed, get the school lunches packed. Once they're out the door, off at school, learning some good stuff, hopefully, I then kind of get to my desk and think about you guys, our clients. What can we be talking about to our clients? What information can we surface to our clients? What new products and services can we talk about? One of the things that we did last week, some of you may well have received this, we're trialing something with our product team called the next best trade. So we're looking at, you know, what people are trading and recommending a couple of things for people to look at and explore based on what other traders like you are investing in. So if you, for example, have invested in, I don't know, NVIDIA, we'll look at other people who've invested in NVIDIA as well and what they are trading in. And we will kind of surface this information, which hopefully serves as a bit of inspiration. So that's kind of what my day starts at. Lots of conversations with product, with data teams. I pull my teams together to think about how we can tell a story a little bit better, right? Because at the end of the day, our clients are not robots out there. So we need to be able to...
This is people business.
Yeah, right. We need to build those conversations, build stories. So you'll hopefully have seen a bit of a shift in the way that we communicate to you. Sometimes we still need to do the kind of obligatory, you know, regulatory comms, which are typically quite straight-laced, but we're trying to soften a little bit how we talk to our clients. So let us know. Do you see a difference? Is it good? Is it not so good? What can we be doing better? Always keen to know what's going on.
Slam them right here at that ask@ig.com email, which is right below Aisha's laptop right there. There we go. Wow, it's like perfect. With a lot of our trader friends also, you know, asking, you're probably the best place to kind of give your view, because I'm actually curious as well. What do you think about, you know, those companies that have hired, you know, superstars and big names to kind of promote their brand and sell for, you know, Bigger Beer saying, you know, he's been introduced to several trade ideas by women, such as Nike. Nike, as Kim Kardashian has an agreement with them. Yes, we know the Skims, and boy, do they have Ronnie Eggnog's female friends in thrall, because they got all of the Skims. Not my thing, because to me, when I see that stuff, I kind of think, oh my goodness, there must be pain.
No pain, no gain, though. Right?
I'm all about the gain.
That's all about the gains, right?
But, you know, like, what do you think from your perspective, you know, as head of customer engagement? Is it worthwhile, a giant company like that, you know, putting their eggs into one basket and having a big celebrity? We've seen how successful that was for Adidas.
Yeah, of course. Of course.
You know, the blow up with... But, you know, how risky is that? Is that something you would? I
mean, I think there's a lot of benefit to celebrity endorsements, right? From a marketing perspective, it's about reach. But actually, a lot of the time, I'm thinking is about relatability as well, right? Yeah, because what we want to do is get to as many people as possible and explain what we do in language that means something to them. So relatability is a really, really big important thing, and that's why a lot of brands are partnering with celebrities, because you know they have a huge fan base. They speak in their own languages. They can try and explain the benefits of brands, products in a way that we don't. And actually there's also that additional trust as a brand. If you're talking to the public about something, well, why do I trust you? You're trying to sell me something. But if you've got somebody else who is a bit like you, and maybe not so much if you're talking about celebrity, but it's all about relatability. If Angeline uses Skims or not, then
I use a Makita hand drill and a multi-tool. That's what I use.
Makita's good. If you're using Makitas, then I'm thinking, well, if Ange actually uses them and she thinks they're great, I trust her more than I trust Makita's marketing, right? So it's all about relatability. So I think it's a really good idea to do. And, the more people that we can speak to, the more kind of, accessible we are as a brand, and the better for us and better for our clients.
Fantastic. So we've got just 25 seconds to go. So not much time, unfortunately, because I love having you on. What does International Women's Day mean for IG?
We talked about earlier on about the fact that we are, male dominated. For me, I see this, or at least IG sees this as really kind of promoting gender diversity in financial services. And I think crucially it's about addressing the sort of gender gap that we see in kind of financial literacy and investment. That's one of the big things about accelerating action here is what can we do to ensure that the products that we make, the products that we have available to us, trading and investing, are more accessible to people, and people feel like, women feel like they can come into this industry and benefit, learn and crack on. So it's all about, for us, addressing that gender diversity gap.
Thank you very much. That was wonderful. Look forward to having you back on with us.
Thank you very much.
And on that note, stay with us because we've got Axel coming up next with Trade of the Week.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hello and welcome to Trade of the Week on Monday, the 3rd of March 2025. Let me begin by looking at the last month, and unfortunately we were right on 3 calls. We went short the volatility index, the VIX. We also went short the dollar-yen currency pair, and then as you can see here on this chart, last week we went short as an idea anyway, on the Nasdaq 100, and all these trades would have made us a lot of money, but we didn't get into them. And the reason we didn't is because I was waiting for a minor bounce so that my risk would be smaller. But this really means that, and I want to reiterate this, you don't trade setups like that. This is not a copy trade system that I'm doing every Monday at 10 a.m. And that's not what I trade either. I don't trade any of these because trading doesn't work like this, where you have a certain time, a certain day where you just come up with an idea. But it's more to do with education of how you manage trades, how to put trades on and things like that. So with regards to these last 3 trades of the week in February, which would have made us a lot of money and which we didn't get into, basically what you could have done, for example, is put half of the position on and then the other half where I said to get in, for example, or you can do different variations of it. So just to be absolutely clear, these are not copy trade systems for those of you who didn't get into those trades and are now getting frustrated. So let's look at this week's idea, and basically what I thought is perhaps because my view is still long-term bullish on the bearish actually on the US dollar. I think that the US dollar strength that we've seen over the last few months is fading, even though last week it picked up again on the volatility that we saw to do with Trump and the US economy actually also not doing as great as we initially thought. And you can see here that the Australian dollar versus the US dollar has come off very significantly. But from a longer term perspective, yes, we are still in a downtrend. But since we broke up above these previous highs here in mid-January, for me, a bottoming formation has been formed. And the same happened on the British pound against the US dollar, and the same happened again on the euro versus the US dollar. So for that reason, I still want to be long, and I want to use this retracement to now go long the Australian dollar versus the US dollar, with a stop loss below the February low and an upside target probably around the 68 area or even higher than that. So today's trade of the week is to go long the Australian dollar versus the US dollar with a stop loss below the February low, which is around 60.80, let's say, and with an upside target around 68. Hello and welcome back to Technically Speaking, and this is where I answer your questions with regards to your trades, etc., and where we also look at the trade of the week and the setups and things that we discussed beforehand. So I was just talking about the Australian dollar versus the US dollar on trade of the week, and yes, you may argue, well, no, the trend is still, your friend is still pointing downwards, and you're right, it is. We still have a series of lower highs and lower lows. But as I just said, we did manage to break up the previous highs, the early and the late January highs here at the end of, at the middle of February. So we had here a candlestick close for the first time above these two highs. So for me, that was indicating that the chances were pretty great that we formed a long-term bottoming formation here and that we would be heading back up again. And we did rise a little bit towards 64, but since then we've come off quite significantly as the US dollar has strengthened once again. But for me, because the risk is pretty small, if we go long here at 62.25, for example, and we have a stop at 60.80, if we are right and our view is that we could head back up again towards the highs seen perhaps even back in September of last year, so we're talking 68, 69, your potential gain is about, let's say, nearly 400 or let's say 370 points, 75 points or things like that. And your initial risk is much smaller than that. So that's why I'd be interested in setting this sort of trade up. And also because if you look at other currency pairs, like the British pound against the US dollar, let's just look at that one. That has already broken through the same pattern, and we see this reversal taking shape here. You can see here we had also the September to January, February downtrend line, and then we managed to break above these January highs. We did so at the beginning of February, mid-February, and since then we've been trading above there. So for me, that uptrend still continues. So what you sometimes do is you look at other markets, you look at the dollar basically against other currency pairs to see whether your view actually could be right, even if on your chart you're still in a downtrend because your chart might be lagging the others. So basically, Australian dollar versus US dollar is lagging the European euro against the US dollar, for example, British pound against the US dollar. Now, questions. Options are safer at the moment. Well, that's up to you. I mean, what is safer? Fine. If you buy options, yes, you have the premium. That's the maximum amount you can lose. If you trade on indices or if you trade or spread bet commodities or FX or equities and look at indices, obviously with the volatility that's increased, then you could potentially lose more. That is correct. And also with the uncertainty regarding whether Donald Trump is going to impose 25% tariffs on its on the US's neighbors tomorrow. On Mexico and Canada and put an additional 10% tariffs on Chinese imports into the US, that might have a very negative effect on equity markets. So yes, you're right. You could buy options if you want to and if you feel safer. Or you could also say, well, actually, this increased volatility is giving me more opportunity to make money more quickly. But obviously, you can lose money also more quickly. So what you need to perhaps do is reduce your trading size so that you've got wider stops available to you. And whatever you do, make sure you have stops in your trading platform on your phone already placed if you trade via your phone, because when things go wrong against you, they can happen very quickly at the moment because of the heightened volatility. So that's my answer to that question. Why will you sell that? I don't know what they're talking about here. Sorry, I don't know why will I sell what. Doesn't matter. Let's go to the next question. Right. Is the uptrend finished for SRB? Let's have a look. First of all, you never ever know whether an uptrend is finished or not. I mean, that really what's SRB? Do you mean RBS? SRB? Because SRB for me is Arabia Gold. Andrew, can you just send me the code or ask the question again and tell me the actual name of the stock that you're looking at, because SRB doesn't bring anything up on the platform. And Adam Deleuze, the DAX is trading in a wide range today. Do you have any reasons as to why this is the case? Well, there's heightened volatility because this morning we opened much higher with a gap on the DAX overnight. And by the way, that was a great opportunity to sell into that gap, which I looked at earlier this morning, but you would have to be up at, I think the signal was at 6:38 in the morning. Yes, that happened because basically on Friday, US markets regained some of their losses over the week, and they basically led to a higher open in Asia. Asian markets also opened higher this morning because there was hope that the meeting yesterday by a lot of the European leaders in London and the proposal of a potential peace deal with Ukraine will now be put forward to US President Donald Trump. All of that led to hope that we could get a peace deal, and therefore equity market sentiment was quite positive. But straight away what happened is after the strong rally in the DAX, and let me just bring the DAX up here early at 8 o'clock in the morning. So this is the daily chart. Let me just go back up to the, let's just look at a 3-minute chart, or 5-minute chart. Can you see here? So that was the 637 sell-off. Then we had this rally here at 8 a.m. And then we had a move down, and this was probably sellers into this buying frenzy here, who wanted to basically probably get out of their larger positions ahead of the risk of tomorrow, the tariffs being imposed by Donald Trump perhaps. And then since then we've just gradually gone back up again because other people think that he might not do so tomorrow, and therefore buying the market again. So there's a lot of volatility going on because of all these different scenarios playing out. Maybe there's something else happening that I haven't seen yet. But yes, a big differential between buyers and sellers. And by the way, if you look at the FTSE 100, we made a new all-time high today. So here we're heading higher. And I know a lot of people went short the FTSE at the beginning of the year. And then last week, they didn't get out. You had an opportunity to get out. That wasn't a top. Because that is an ABC correction. That's an Elliott wave zigzag correction. And that's actually a huge buy signal here, not a sell signal. So don't think because something is making an all-time high, it can't go any higher and therefore it has to revert. It might do so for a day or two, but the trend's your friend, and that's still pointing higher. So the FTSE is making new all-time already high. So SRB was Serbia Gold. So okay, let's look at this. Let me go back to this one here. When will this top out? Well, I've just told you, if markets make new all-time highs, then there is a reason for that to likely continue. Let me just look at the daily chart of SRB. So what we've seen here is Serabi Gold, I should say, not Serbia. Here we've had a bearish engulfing pattern. So that is negative on Thursday. And in the last 2 days, between Thursday and Friday, we've taken out 1, 2, 3, 4, 5 days of gains, even 6 days of gains previously, 6 straight gains of gains. So that is telling you that the top, at least short term, is likely in place now. The question is how far could it go? So what you would probably do is look at your trend line and see whether you're finding support around your trend line. Now this is a tentative trend line because we've only got 2 touching points. Actually we've got 3, so we could say this is a proper trend line. Let's just make it a solid line then. Yes, so we're getting close to that trend line. Maybe we're going to bounce off here. For a top to be confirmed longer term, we would have to probably take out the previous highs here and fall all the way through the December low. So that's a long way away, or at least the late January low. But yes, short term, it does look as if this uptrend is at least pausing and may even have short term reverted to the downside because of these negative candles over the last few days. MasterCard. Let's look at MasterCard. The next question. Now, of course, I'm not giving you any trading advice. I'm looking at the charts and interpreting them just by glancing at them. Obviously, if I do proper technical analysis, I would spend an hour on this at least and really look at all the details and everything. But yes, MasterCard just by glancing at it, what we're seeing is a retest of the previous high from February. We saw a sideways trading range, and the momentum in the last 4 or 5 days has been upwards. So it does look to me as if we're breaking out, but we need to see a daily chart close above the late January high for us to confirm this breakout to the upside. And once that is the case, well, obviously we're making new all-time record highs, and what we then would have to do is probably look at Fibonacci extensions from the last relative lows, which are important. So we could do that, for example, from here, from the low seen in 2020. So how do you do a Fibonacci extension? Well, you look at your Fibonacci extension. So let me just try and find that here. Fibonacci. Okay, I haven't looked at Fibonacci extensions on the platform for quite a while, as you can tell. I can't find them on here. So why don't we look at that next time around, and I'll show you how to create a Fibonacci extension. Or let me just see whether I can have them here. Here they are. So you take an important low, and you can see here you had 2 monthly candles going down against the trend. So that is an important low. You take that distance, project it to the highest point here of that next move, and then from the highest point down, you go to the lowest point before the market continued its uptrend. And that gives you your Fibonacci extension targets. So let's just do it again. So what we do is Fibonacci extension, lowest point, highest point, and then from that up move, the corrective move down before the trend continues here to new highs, and you just put it on there, and then you get these Fibonacci extensions. So what are the extensions we've got? 161.8, that's the target for MasterCard, the next one, and that one comes in on the spread bet at 60,257. So that's the next upside target for MasterCard on a monthly basis. If we were to close on a daily chart basis today or maybe this week above the January 30th high. So this is how you would analyze this sort of breakout here. So let's look at LGen, another question. I like it when questions come in like this. Keep them coming. So legal in general, what we can see here is basically we had a spike higher at the beginning of February. Since then, we've been trading sideways. You can see this ABC corrective pattern again. I just showed you on the FTSE 100. So we go down, up, down. It's sort of a zigzag correction. You can see it again here. You saw it in December. And I trade this pattern personally, actually. It's only right about half the time. But because the reward potentially is much bigger than the risk, it really works out well. So for example, here, can you see you went down from a high, back up again, down again, and then you held here at support. So what do you do? How would I have traded it? I didn't, by the way, but how would I have done it? Well, I would have waited for a buy signal. What's a buy signal? Here you can see you had a Harami, an inside bar, if you looked at the candlestick. And basically on the next day, once you break out of that inside pattern after this ABC correction, you go long here, you stop as the last low. So that's your tight stop. And you can see here, your potential reward is 4 or 5 times greater. So how you would have traded here? So same thing again, you would have gone long on the break, not just on the close, but on the break on Tuesday of last week with a stop loss down here. And you could have had another entry opportunity here on Friday when we went down on the share price to 240-ish, and right now you're long. Now, would you go long now? No, because your stop is too far away, unless you expect a new high to be made, in which case you can see here the distance probably 2 times what your initial risk is. In that case, it might make sense. But yes, because of that hammer formation, if you want to go long, I would only do so once you break above last week's highs, just to confirm that you're actually breaking higher. And then if you wanted to have a tight stop, you would take Thursday's low. If you wanted to have a wider stop, you would have the low from the 24th of February, last Monday, in place here, with an upside target being the February high, and then longer term, also higher highs. But you can see here that the high seen in February was only intraday above these key resistance areas here made up of the January highs, and they might act as really strong resistance going forward on a daily chart closing basis if we continue on the current upward trajectory. But at the moment, as you can see, we're trading a big sideways trading pattern. Short term, we're trading upwards. Since last week, we had our first bullish week in 3 weeks. no, in 4 weeks, and this is likely to continue in the short term at least, just eyeballing the chart here. Gold is the next question, so let's have a look at gold. Well, spot gold, we made all-time record highs, and we did so on this uncertainty, and also you saw probably President Zelensky at the White House and what happened there. So that led to quite a lot of volatility, and Donald Trump's comments anyway do so all the time, and his posts on True Social as well. And you can see here the gold price has currently come off its record high, which was made around $2,950 per troy ounce last week. You do know that my upside target, and I've been saying this for years now, is 3,000. That's the first one. It's just below 3,000. That's the Fibonacci extension. I've got another one at 3,100, but I wouldn't be surprised if we're around the 3,000 mark, because it's such an important round number that everybody can talk about. And remember that we might actually, short term at least, struggle around there. So what we've seen is a bearish engulfing pattern here. Short term, that's bearish. So yes, we may come off a slightly further, perhaps retest the October high here on the weekly chart that I'm looking at the moment, and that was made at 2,790. That should offer pretty good support. If you go to the daily chart, what we see here is that we've fallen through our uptrend line, which goes back to the beginning of the year. We are currently flirting with the 30-day simple moving average here, and we are holding above last week's, on Friday's low at $2,833 per troy ounce. So right now, perhaps some consolidation and sideways trading being seen here with regards to the gold price. But as I said, if we were to fall further, the October high here should really offer pretty good support going forward. Now, somebody says technical trading won't work for a while anymore. Well, I don't know. All I can tell you is my own experience. And basically, I've been doing this for over 30 years. I've traded my own money for over 30 years. And, well, I'm doing pretty well. So all I can say is that if you don't believe in it, don't use it. You know, look at fundamental trading, look at macroeconomic events trading, look at flow trading, whatever works for you. You don't have to trade technically. Some people prefer to do so. I prefer to do so because I can see very clearly where I'm wrong on the chart, and can do so very, very quickly intraday, which you can't really do fundamentally speaking. But it's up to you, really. You don't have to believe in it. Yeah, what else can I say to that? Okay, what else can I see here? No, these are all the questions I've had. Please send in any other ones if you're interested in that. What else can we talk about today? Well, we saw all the defense stocks after yesterday's European leaders meeting in London go up. So let's look at, for example, Rheinmetall in Germany, and you can see here that they've rallied very nicely. Sorry. Yeah, spelling mistake. If I can't even spell something German, that's not looking good, is it? Rheinmetall. So here, can you see this huge gap higher? Huge up move in Rheinmetall, up 11%. So yes, and we saw that on a lot of other defense stocks as well. BAE Systems, I think, also up. And you know, people always say to me, "Yeah, but the charts. Can I see this sort of thing beforehand?" Well, no. Obviously, it's dependent on the data. Can you see here BAE Systems? I think that share price was up earlier today, about 16%. That's up 13%. So all these gaps. But before these gaps happened today, what did we know? Well, look at the market. I mean, we were forming these reversal patterns to the upside. We were bullish over the last few days. So the trend was already pointing towards higher prices being seen. The question is, what do you do now? Do you expect this price gap to be closed? Or do you expect basically the market to just continue to go higher? Now, with stocks, usually when you've got a big gap like that, well, the trend tends to continue, but if it's that big, maybe we will retrace some of that gap and close some of that gap before we go higher. But you can see Rheinmetall trading here in all-time record highs, so looking very, very bullish indeed. MSI, so let's look at MSI, another question. MSI International, here we go. We've got 2 minutes left. And what can we see here? The pattern I just told you about, ABC correction on the monthly chart. So down, up, down. Now, do you want to trade on the monthly chart? Probably not, because if you were to, you would buy now here and put your stop below the February low and hope that the pattern is correct, in which case you should make a new high above the high, the all-time high seen here, I believe, in July of last year. But let's look at the shorter term time frames, because I don't think anybody's trading on the monthly chart. And on the daily chart, you can see here that we are nicely heading up today. We're trying to close above this previous January high. If we do so, we would be forming a reversal pattern here. So you could basically put your stop below the February low. And in that case, if it is indeed a reversal, the next upside target is this high here going back to mid-November. That would be the next upside target together with the July high from last year. But you can see here we have already today, and are very likely to close above that, also broken through our our trend line. That is not the right trend line. Sorry. Let me just delete this and put a proper one in. So from that high through this side, that's a tentative trend line. So let's just make it a dashed line, 2 points only, and we're breaking through that. So that's all looking pretty bullish in the short term. That's for today. Technically speaking, I hope I showed you some chart patterns, some way of looking at charts. Obviously, only use them if you're interested in them. If you don't believe in charts, don't use them. Do something else. Do whatever works. But whatever you do, always use a stop loss. Ideally, make it a guaranteed stop loss, and make sure that you don't overtrade with regards to your size. Don't trade 5 or 10% of your capital per trade, because at some times you've got to go bust. And also make sure that your average profits are greater than your average losses. Good luck. Goodbye.
Did the market just break? It is Thursday, February 27th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in Chicago, continuing our rotating cast of characters in the guest seat this week. If you're trading these markets and you're on YouTube, why don't you come over to the website, tell us what you think of it, what we're all about, tastylive.com. Of course, you should be using the platform if you're not, Tasty Trade. But if you're already on the platform, you're already on the website, come join the chat on YouTube. Tell us what you think of these markets, what you think of the sell-off today. I know a bear that's feeling pretty good right now, Mr. Spivak. But that sell-off in equities couldn't be held up by Atlas, that is NVIDIA. We ultimately see that bond yields take a little bit of a turn today as well, following a confusing, chaotic morning in communications from our commander-in-chief and his National Council of Economic Advisors. We also see that gold and silver get taken out to the woodshed today. Liquidation type of session in markets. Gold lower, equities lower. Heck, the only thing that's really up above water is the US dollar. Every major currency down across the board. It's just a really ugly kind of day, guys, here. Let's turn to our charts. We look at the S&P 500 down 1.6%. The NASDAQ off 2.78%. Yeesh. Dow Jones off by 0.45%. And the Russell off by 1.51%. Cryptocurrencies continue to melt down and slip and slide. Bitcoin off 1.4% and Ether off 5.4%. In that bond market, you see that yields are up across the curve. 10-year yield today settles in at, we'll call it 4.29%, 4.27% right now here in these after cash equity hours. And finally, we go to gold and silver, right down 1.61 and silver off 2.36. But Ilya, it's the NASDAQ that draws our attention today. This has been something problematic this week. We've looked at this potential rising bearish wedge. We've talked about the sector rotation. Today, it feels like the bill comes due. We never climb back above that 1 week moving average. We can't get back into the August to January uptrend. The market fails today and fails hard.
It does. If you're any kind of washer of charts, if you're any kind of washer of the tape and price action, as I would argue you must be, because any fanciful ideas you might have or I might have ultimately have to be validated in the price action. Otherwise, they're meaningless. You look at this and you say, well, we've been in a well-defined range, as we've talked about, since early December. We set those highs then. Tellingly, that's also the bottom in the 2-year, so that tells you where Fed policy expectations anchor. They haven't been very mobile since then. You get stuck in this range. You very pointedly carve out its bottom on multiple occasions to tell you where that bottom is, where the floor in sentiment is. And today we take that out. This is unmistakable. You don't have to be a believer in technical analysis. You don't have to be a believer in tape reading to look at this with the naked eye and go, the market had a different idea today than it's had basically since early November. And the speed, the violence with which it took this level out ought to, I think, be a measure of conviction. This is not some accidental, oops, I overshot a level. No, this is a very pointed breakdown through what is an unmistakably significant barrier. And forget tickers, forget arguments, forget whatever macro machinations you might have, just on pure ticker agnostic, what does this chart look like kind of consideration. This looks like a market that's topped and is ready to lose more ground.
Thomas, this is obviously not a good market for equity bulls. What do you think of this price action here today as we make our way into a potential topping pattern in the NASDAQ here? I'm drawing up a double top to get a measured move to the downside for everyone. But what's your take?
I was liking NASDAQ at 28,800 to do a little dip buying there this afternoon, but the price action into the close the last couple hours, it's just showing you that it's completely risk off. We also have PCE tomorrow, so maybe some de-risking ahead of that as well, but I think this is more driven on NVIDIA kind of having good but not great numbers. The market was really looking for NVIDIA to kind of be the savior yesterday of the previous sell-off, and that did not happen. So it's not surprising that the VIX jumped from 18. You know, Chris, you mentioned that gray zone yesterday, all the way back up to 21. So it's an ugly day. Not much helping you in the portfolio, and I think this is for equity traders. If you're trying to get long, it's still a sit on your hands situation, and it's flipping more to looking like you're either going to have to range trade this or get on the short side.
As a momentum person who has a strictly long-only bias in stocks, the past few days, while tempting to try to, get in at a cheaper price, the momentum profile has just been negative. The slope of those moving averages, if it's the 5 all the way up to the 34, they're turning more and more negative. The rate of change day by day is getting more aggressively to the downside. If this is a neckline, Ilya, I know that you like your horizontal levels. The closing low that we have in our market post-election comes on November 15th at 20,751 3/4. You have a swing low here on the 27th that is 20,763.75. We could posit that a neckline is somewhere in this region. There's a few overshoots, but no matter what, if this is indeed a top, then that's calling for a move closer to 19K. We start to outline targets that would ultimately have a structural technical bias down closer to the September 6th swing low, which is 18,800. And again, markets overshoot, so who's to say that we wouldn't overshoot in a bearish type of situation? But the NASDAQ is a different story than the S&P right now. The S&P hasn't yet reached its swing zone of support, so it almost feels like maybe there's a little bit more weakness in the NASDAQ coming. The S&P 500 could dig into 5,800, and if you find some support there, your NASDAQ's going to bounce well ahead of target. Maybe for people who haven't been short yet, Ilya, we wait to see if we can get some sort of bounce that comes out of a test of ES near 5,800, and that's then the rally to sell. Sell rips, not buy dips is the mindset, as it were, as momentum turns negative. Mm-hmm. So I'm still sitting on my hands, Thomas. You mentioned it's a good time to be a hand sitter right now. Obviously, would like to pull up some sort of opportunity to dollar cost average in, perhaps on a longer term basis. We're in the teeth of a 5% pullback right now, which has been one of the best buying opportunities over the past 15 years. Nevertheless, though, as we consider what equity market exposure would look like, the rotation today, which has been a North Star, I think, and very helpful for people like myself, if only to use it as okay, the rotation's still crappy, let's not get in long just yet, to check our impulses, our worst impulses this week. XRT here, again, if we talk about an ETF that is somewhere akin to the one that's going to be most sensitive to what happens in a recession, XRT is down 1.98%. XLK, another early bull market leader, this is down 3.62%. Did you like semiconductors? They're off 6.18% here today, 6.16%. The uptrend from the August and those January swing lows now broken, freshly low here in play. And on the other end, it's kind of all the stuff that you don't want to see to the upside if there's going to be a green shoot of bullishness even on a down day. XLP is up by 0.02%. We can go to XLE, Energy, big dividend payer. That's up 0.54%. Financials, I suppose, are finding a place to be hidden out in, up by 0.55, but that's now 8 of the 25 sector ETFs that we track here that are in the green, meaning 17 of the 25 are in the red, and the distribution is just terrible. So, why try to buy a dip here right now? Ilya, I suppose, like, if I'm going to pat myself on the back, have I been short? No. Have I had legacy long exposure on? Yes. Have I not made the mistake of trying to get in more long and double down on that existing belief? Absolutely. And I think the macro guideposts have actually been pretty good indicators to follow here, which is to say that given how the markets reacted, CPI versus PMI has clearly had a bigger impact than that hot CPI report. The market is very fearful of growth. Rates are heading lower and stocks aren't responding positively, and the sector rotation is still crud. So why press a long position right now when your technicals are issuing such negative momentum? I suppose my only reason now is because Sosnoff challenged me to it. But outside of that, there is nothing on my checklist that says here is the day going into a weekend when Fridays this year have been uniformly red, that tomorrow is the day that I should be looking to pick up some long deltas, if not for the Sosnoffian challenge ahead of me.
Well, and rightfully so. I mean, you mentioned the CPI report. Why didn't the markets like it? Because if you looked at that CPI report, it actually confirmed what PMIs were showing you back in January. Let's not forget the violence with which the market has met the February PMI numbers last Friday, which were aggressively negative. Should not have been the first time, if you've been watching the macro, that you went, there might be a growth scare. Indeed, we've been talking about it since the beginning of the year. I've been mentioning it endlessly in the wake of the PMI numbers that came out in January, which were sharply weaker than expected, and in the worst way, weaker in the service sector. Manufacturing has been anemic all around the world for the better part of 2 years, including the U.S. No big surprise there. During COVID, obviously, the onus was on the goods demand because everybody was stuck at home in lockdowns all around the world and not participating very much in services. When the dial flipped, goods demand was overwrought. Quote unquote, revenge spending on services took the lead. Services has been the driver of growth, and that growth has been in the U.S. Europe has been anemic for the better part of a year and a half. China hasn't been able to get up off the mat since before they reopened from COVID restrictions in late 2022. They managed, I think, something like 2/3 of a quarter at the start of 2023, where there was a bit more vigor. It fizzled almost as quickly as it came. So if you've been watching this You've seen the barge that is global growth and indeed the US economy, its only working engine, start to turn for quite some time now. The CPI numbers were not different. What did we see in them? Yeah, headline numbers were higher, but why? They were higher because we saw statistical rolling over of the negative influences that were there before from goods and from energy. Again, the service sector, the place that you'd be worried about, that showed weaker impulse for price pressures and therefore for growth in the latest numbers. Why should they have been encouraging? They weren't from a growth perspective. You see what we just heard from consumer confidence numbers. The University of Michigan numbers were scary. Just this week, the Conference Board published another version of consumer confidence numbers, lest you mistrust the University of Michigan.
Right.
And told you the same story.
If you're a Buckeyes fan, you might.
Well, see, there you go. As a sports ball noob, I'm not sure I even know what that means.
Oh God, keep going.
But I do know that when you read these PMI reports, when you read these consumer confidence reports, when you look at what the Atlanta Fed GDP tracker has done, which is go nowhere but down in recent weeks as it absorbs incoming information.
The impulse
This is
negative.
unmistakable. It's unmistakable. So why you would want to say you're going to be the one that's going to stand on the tracks as the train picks up steam towards you, I really don't know.
Thomas, maybe you have a different view here. You did say that you're, looking at the market and saying it's a good time to sit on hands if you're looking bullish right now. It feels like today was a pretty important day for the AI narrative. Even something like XLU, the utilities ETF, which had a huge run last year thanks to the demand for electricity, it's up by 2.22%. Yet when we look to what's happening in natural gas, it's only off by half, and crude oil is up by over 2%, back to about $70 a barrel. What's the deal with energy right now in the market? You're a local commodities expert here. Surely this is related to OPEC Plus and not necessarily expectations of higher demand for energy given everything else that we're seeing in the market this Thursday.
Yeah, so OPEC's signaling that they're going to push back bringing these voluntary cuts, or they're not going to bring back supply as soon as they previously said they were. At least that's what's signaling right now. So that's saying, what they're saying is the market can't absorb that spare capacity right now if it's brought back on. So that reflects the growth worries in the economy right now, and then you could trickle that into the tariffs. Trump, we talked about these headlines yesterday. Even, the media is getting these tariff headlines wrong, and you see that a lot if you look between some of them, the timeline, the exact numbers, things like that. The energy trade between U.S. and China, it wasn't huge, but it's going to be pretty much zero going forward with these additional 10% tariffs. China doesn't import a lot of natural gas or crude oil from the U.S., but they do import a lot of coal. So if you look at stocks that export a lot of coal, Peabody, forgot the ticker symbol for that. I think it's BTU. You could see the impact of those tariffs across their price action is pretty bad with their stock right now. But like Ilya said, this consumer sentiment, you also had the AAII survey, the American Individual Investors, I believe, that hit 60% bearishness in their survey released today, which is a pretty extreme level. Only 19% of investors expect a bullish move over the short term. When would I want to get long? I'd want to see the sentiment go to an extreme, and I don't think we're there yet. I think this probably has more room to run down, especially if you look at the price action, considering the close even more. It's not really a good time to buy. These big sell-offs, sometimes you like to take a stab on the long side. The close, in my opinion, that price action is saying do not do that. Of course, we could get small bounces here and there, but I think the calculus right now is going to be further downside, especially with the VIX popping today. Just really the risk to reward on getting long, I don't think it's there at all right now. Energy is the only thing, XLE, financials holding up the S&P a little bit, but nowhere enough to make a difference. And XLE, of course, is the pop in crude oil today. However, I think that was a technical move. I don't think there's anything big in the market that kind of changed that. We did get the EIA reporting a reduction in inventories. That was the first one in quite a while there. But all things considered, even crude oil is not really where I want to get long yet. I'd want to see it drop even more down to 66, maybe 67, and then I'd try to take a stab there. Of course, more volatility would come in, so you try to take advantage of that volatility in the trade there. Crude oil hasn't had much of that over the past month. But yeah, it's just not really a time to buy. The PCE numbers, maybe a little impact, but I think this is a bigger story than just inflation right now. More Fed cuts, that's been a good thing for the market over the past couple of years, but not when it's being driven on growth concerns.
I think Thomas hits the nail squarely on the head, and this is sort of the essence of what we were talking about at the end of last call there. The idea that what kind of rate cuts you're getting and the motivation behind those cuts really matters for how the markets interpret them. If you're talking about the kind of cuts that are looking to bring down nominal rates alongside the drop in inflation expectations, because the Fed has been successful in, at least in great measure, cooling price growth from its peaks with a rapid rate hike cycle, that's one thing. That tells you, oh, well, the Fed doesn't want to kill growth, because if inflation expectations fall and nominal rates stay high, then the real cost of borrowing, that is nominal rates minus expected inflation, that surges if expected inflation comes down. And then everybody finds it more expensive to borrow. Businesses, individuals, investors, everybody. And that's the kind of thing that kills a soft landing. So obviously the Fed doesn't want to do that. So rate cuts that start to bring nominal rates closer to what expected inflation is doing is something that is a pro-growth kind of thing. Markets look at that and go, well, as long as economic growth is continuing, and the reason that the Fed is doing this is to not kill the growth, not because there is some sort of issue, this is great. This is more money that costs less to borrow to feed an already building positive momentum. This is very good news. We saw this clearly on display in September when the Fed went very dovish and the markets went, come on. No. Look at the economy. Everything's doing fine. What, you're going to reflate this thing? No, you're not. Stop it. So when you see what we're seeing now, this is not that. This is different. And it's different because now the market looks at the data and goes, oh no, if you're cutting now, you're saying that in 12 to 18 months per cut, you're going to get the full breadth of the support that this economy now needs. So you're behind the ball. So we're going to have to be out here dealing with recessionary fears, and you're not meeting until later in March. And whatever you do, even if what you do is fast acting, even if the Fed decides to cut rates in March, which is not on the table whatsoever at this point.
No.
It'll be a year before that help arrives in full and is absorbed in the economy. Now the market is getting concerned that you have an ungluing of U.S. growth, and with it, the ungluing of global growth. Because without the U.S., there is no global growth in this environment. This is a very different kind of a relationship between stocks and risk more generally and what's going on with Fed policy expectations. These PCE numbers are expected to come in. We're expected to see the lowest core PCE number since June. That might be helpful in that it helps to motivate the Fed to act, but that's already expected. That's already the mainline forecast. God help these markets if it surprises even a tad to the upside as CPI did.
Yeah, core PCE is doing at 2.6%. I mean, Ilya, what's the argument that inflation matters right now? I guess it's asymmetric, right? If inflation's
Only to
too
the
sticky.
extent that it motivates the Fed. I mean, the markets clearly want it. A week ago, right, the cumulative outlook for rate cuts, just taking a really simple spread and going, okay, if you take the implied rate for the current active Fed funds futures contract, you subtract it from the implied rate in the Z5 contract, the December contract. How much do you have priced in for the year? Never mind when it arrives. Let's not get stuck in the weeds.
We'll call it 50 basis points.
About 50 basis points. And then for next year, a week ago, what were you looking at? Like 18? So about 50-50 chance of one cut next year? We have gone from a cumulative 55-ish basis points over 2 years, this year and next, a week ago, to 83 basis points today. So we've added one cut and about a 50-50 shot at a second one in excess of what we had there a week ago. I mean, clearly, these inflation numbers matter only to the extent that the markets get some validation that, yeah, the Fed heard them. They see the data. They're not asleep. They're going to step up their easing timeline as the repricing in the market suggests. And if the data suggests that the Fed is not going to do that, that they are not reactive, that they are not going to over-extrapolate, as they've told us that they won't in the past several months, then they're going to fall further behind the ball, and the problem is going to be that much worse.
Yeah, we've seen here in recent weeks the SR3 contract perk up, and in particular, when we go over to Z5, you can see how that's continued here. It's off the lows today. We're getting pretty close to a 3.75 Fed funds rate by the end of this year, which at the lows in February, we were talking, closer to 4.25 than anything else. But it's all for all the wrong reasons. Big difference from last year, right? June, July, the market's rallying up. And then you get that split where all of a sudden rate cut odds are continuing to rise, but stocks are falling because this is the growth concern. It's a growth concern spike, just like this is a growth concern spike in rate cut odds. It's the exact kind of mix that stocks don't like. I think we've been consistent about that all week long, Ilya.
Yes.
And those conditions haven't necessarily changed here per se. What does become of note then is because of the market's interest around GDP and growth trajectory. Tomorrow, the Atlanta Fed GDP now releases their first update since February 19th, since last Wednesday. And the trajectory of that data have been weaker. So if we think about, the impulse, we don't necessarily take the baseline reading itself seriously this far away from the actual data release, given where we are on the calendar. I would point, though, that right now the direction has been from 3.9 to 2.3, and the trajectory remains on a path of weakening relative to where we were a few weeks ago. I mean, at what point do we think that it's a good time to just jump in with 2 feet? Thomas, you're talking about sentiment extremes here. I think that's worth exploring a little bit more. I had up here earlier on the screen the net, not the net, the raw survey readings for bullish, neutral, and bearish. Bullish is now sitting at its lowest level that we've seen since March 2023, which again was a pretty good time to buy. But I would also posit when we go from a reading of 50 or higher down below 20 for the first time, as we did in 2021 to 2022, that first dip below 20 was not a good time to buy. Did you want to get long stocks in February 22? Probably not. What about in April that year? A good time to buy was back in November, in September perhaps. But you had a lot of false washout readings here, like sentiment's so extreme right now. There was a point actually in 2022, you could make the argument that we had the fewest amount of bulls on the table going back to the global financial crisis. since before then. That's as far as this data series goes. But that wouldn't have been a good time to buy. The bearish sentiment on the other end, we see it spiking up to its highest level since September 22, which if you got long stocks in late September 22 and you wrote it out for a few weeks, you pretty much nailed the low. This was one of the things that we pointed to, Ilya, at the time, at least reasons to look to get long. So you're in that territory. You're getting there where the sentiment is really, really out of whack. But it also feels like it's the first day. I mean, we're going to have a conversation. If we go any further from here, this is going to be the most bearish that people have been on stocks in this survey series since March 2009. That's really extreme.
Yeah.
But
yeah,
also was justified. I mean, guys, what happened today? I saw the news flow this morning and I threw my hands up in the air. 8:15, Kevin Hassett, one of Trump's top economic advisors, comes out and says, yeah, the tariffs have been pushed out to April, like time to negotiate. And then 30 minutes later, Trump sends out a post on Truth Social that the tariffs are happening on March 4th. Now, is that a sign of potential negotiation again? This is the problem with these tariffs. I just saw a New York Times alert 27 minutes ago. Mexico began to release nearly 30 cartel operatives into U.S. custody in a signal that it planned to cooperate with the Trump administration. There is a good shot, despite what Trump said today himself, there's a good shot that the tariffs are pushed back because we get some more window dressing, if you will, to make it look like Canada and Mexico are doing more to help out. We saw this with Canada last month. We saw it with Mexico last month. But it's becoming just a little like you can't trust the news flow out of D.C. I mean, now I for one, now, anytime Kevin Hassett says something, I'm just going to say, well, let's see what Trump has to say about that, because he clearly isn't in the know. And I think for a lot of market participants, that's a problem. You expect these people to be mouthpieces of the administration, and you're getting completely mixed signals altogether. So
I mean, here's the issue, right? First of all, clearly that's the case, but more importantly, that's not your opinion or mine.
It's the markets.
If you go to read the PMI results, if you go to read the ISM PMI survey, not the S&P Global one, let's say you don't like S&P Global. Let's say you think that they are polling the wrong people. It's a survey. It's possible that there's some bias in survey selection. Who knows? You read the consumer confidence numbers from the University of Michigan. You read the consumer confidence numbers from the Conference Board. You read the Institute of Supply Management PMI numbers. All of them say the same thing. Are they all wrong? And what is it that they say? That the deterioration in sentiment has to do with uncertainty around fiscal policy. So it's not that the tariffs are coming or not coming. It's that markets hate uncertainty. They would have preferred to know that they're coming than to be constantly jumping back and forth. How in the world are business leaders supposed to plan? If they knew that the tariffs were coming, they knew what the rates were, they would say, right, okay, so I need to adjust my operations for the next 12 months in XYZ way. Okay, unpleasant, painful, probably a retrenchment for markets, but not the kind of thing that gets people spooked in a lasting way. When you don't know what's happening and you can't have a plan, that's much scarier. We can see time and time again, the markets might, for example, expect a rate cut from the central bank or a bad number out of XYZ economic indicator. And the number comes out, or the policy move comes out exactly in line with expectations. Do markets panic? No. Is the outcome bad? Maybe. But if it's expected, then it's already priced in. Markets are discounting mechanisms. Uncertainty means you don't know what to discount, how, and to what extent.
That's the big
Which means you are constantly on edge, and eventually you get a day like today. Bonds are getting sold. Stocks are getting sold. Metals are getting sold. Currencies not named US dollar are getting sold because everything is going to cash, because people say, you know what? I don't know what is going on here. I'm going to put my money back under the mattress until this dust clears because I don't know what I'm supposed to be buying or selling.
Yeah, and I mean, that's the ultimate safe haven, right? Cash. So when you see the liquidation like this, it's reflecting that huge bearish sentiment increase that you're seeing in the market. What I wonder is, at what point in the market sell-off does it actually put pressure on the Trump administration, or at all? Even if they signal it or it's just internally, when does that become a concern for them? And if it does, do they say, let's calm down a little bit, at least on putting all the stuff out on the news flows about the tariffs, and maybe take a little bit more of a comprehensive approach? And if that does happen, does it provide market clarity, remove some of that uncertainty, and allow the rally to come back? But then you have to ask yourself, even if that some of that uncertainty is removed, you're not necessarily going back to a Goldilocks environment right away, where you just go back to where we were in early January or something and say deregulation and tax cuts are going to help us, and then you totally exclude tariff uncertainty. So I think this is something that's going to persist for at least a few months. This isn't really a short term, a couple weeks and it's over. I think this is reflecting longer term expectations in the market. And that's what's more concerning to me, trying to take a stab at getting long here, and why I won't do it.
Yeah.
It feels like they killed the golden goose.
Yes.
Yeah.
The golden goose was, you know what, the market's rallying because of tax cuts and regulation changes. As long as the economy stays in shape, you have nothing to worry about. That's been my line for years, right? Check the scoreboard at the macro level. If unemployment rate is with a 4 handle, CPI has a 2 handle, and we're growing between 2 and 3% in real terms, everything else is just noise. But the issue that we now
off a lot of that. You can brush off a lot of negativity if that's your unemployment rate and that's your growth rate, you can overlook a lot.
But now you're talking about a potential cut to GDP, a potential rise in inflation, a potential bump in the unemployment rate, and the golden goose that's allowed us to whistle past the graveyard may have been slaughtered. It's tough.
And that's
Thomas,
why, you know, that's why inflation, you could say it doesn't matter as much as growth right now, but if inflation is even a little bit over expectations tomorrow, I think you could get another flush out, because like Ilya said, that affects the calculus at which the Fed can cut, and then it could really get ugly.
Okay, but if let's just say we're correct in our expectations that growth over inflation right now, tomorrow's PCE doesn't come as a surprise. Let's say it's right on the nails. We know how to predict it. We get 85% of the inputs already. Does that set up next week's non-farm payrolls number as perhaps the most important jobs report that we've seen since the one on August 2nd? That's a bad labor report, and we get signs that the labor market's now cracking with all these potential changes in federal policy. Why wouldn't that just be the knockout punch for stocks for a little while?
I think it could be, because you already saw the unemployment numbers this morning, or jobless claims rising. Maybe that's due to some of the government cuts, but I think it's more structural in the economy right now. I'm looking for a not so great NFP.
And the question really becomes, like, what does NFP have to do to turn the tide? Are you going to get a sudden explosion in hiring when every single input across the board, let's remember, employment is lagging, all of what you are seeing in business confidence surveys and in consumer confidence surveys tells you the path of least resistance for businesses here, as they are uncertain about how to plan for what comes forward, is to retrench. So are we going to see a huge bout of hiring here now? How likely is that?
No.
And if we are, do we expect it to sustain? So it's the kind of thing where if the market gets a really bad number, it gets really scared. And if the market gets an okay middling number, it's not particularly encouraged. You have to really shoot the lights out on data from here to tell the markets, and this is sort of devil's advocate of my perspective, January, February are the first 2 real months, really more like a month and a half, of the Trump administration doing things and moving quickly. They got a mandate.
They have to, though.
They're following their mandate.
Well,
they're not
they
doing
have to.
anything that they didn't say they wouldn't do.
No, but there's a calendar here that they're working with, which is why I think this is proceeding at which the speed with which it's at proceeding. You run into the reality of midterms, and I spoke about this with Victor last night. Paul Ryan's budget cuts and tax plan in 2017, 2018 had I looked up the number last night, it was about $135 billion worth of cuts over a decade of Medicaid. And that pulled at like 25% underwater. And the current bill in front of us right now is for $800 billion in cuts over the next $880 billion in cuts over the next decade to Medicaid and $230 billion to CHIPS, which is helping, lower income kids get food. So if Paul Ryan's plan was so unfavorable, who's to say that this one is going to be anything but more unfavorable? And like as that gets out of the public, you get
advocate.
Right. So like if you want to do this, you got to do it quickly,
right,
before the public turns against you.
Right. And this is why I say devil's advocate, because the flip side argument, and I spoke with Victor about this on Tuesday, is you had a mandate. You came in much faster with acting on that mandate than you did when the Trump administration had its first go round in 2016, 2017. And the markets get jarred, and there is an adjustment. Markets go, whoa, 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 whoa. And January, February, maybe into March are rocky. But then things even out because the markets get used to the cadence and understand what's going on. And the sell-off is not long-term because the economy is ultimately not retrenching because everybody is convinced that the gates of Hades have opened, but they're just unsure and uncertain and retrenching in the face of that. But as they acclimate, that will dissipate, and markets will find their footing, readjust as they usually do to the new environment, and go forth. The reason I think that's the devil's advocate argument here is because it is, in my view, really rose-tinted wishful thinking. Because by the time you get to this kind of acclimation, the kind of damage you can do when you are sitting near record highs, when you're expecting a revision in borrowing costs much higher for most U.S. corporates as they refi a mountain of debt over the course of this and next year. That COVID money is finally coming due. As you get the standstill in China, the standstill in Europe, all of the constellation of factors, you can get this liquidation happening so fast that you start to run into credit stress. This can pick up momentum extraordinarily quickly if you really spook the markets into a liquidation type of mindset. And looking at the markets today, that's exactly the mindset that they're in.
Where the circle for me. Yesterday, high yield, believe it or not, HYG, we go to J and K. These were closing up on the highs for the year recently. Mm-hmm. So credit markets are not showing signs of stress.
Not yet.
Right now. Is that the key here, though? Like if you're going to be a structural bear on the market moving forward for the rest of the year, not just like a short-term macro window where the market needs to like remind politicians who's in charge here and ultimately like we're going to vote with our feet and our wallets. And so you guys want to do all these things? Equity prices in the U.S. should actually have a 20% discount attached to them. Treasury yields need to be 50 basis points higher. We need a premium now to invest in the United States, folks. Cheap money be damned, right? There's now an extra layer of risk and uncertainty to consider. If credit markets aren't breaking, then where's the additional downside? Because then the Fed's not going to step in. I mean, maybe is that the dream scenario, Ilya? All this kind of goes on without the credit market showing stress, so it keeps the Fed at bay. They're going to like, well, we can't do anything about tariffs, so we just got to sit on the sidelines and see what the data tells us to do.
And I think what the markets are hoping for is that they've seen the data. I think what the markets are hoping for is as they get Fed communication from here going forward, what they get is a tone shift where the Fed goes, okay, we've seen the data. Things have been rocky. There's some worrying stuff in the survey data. There's some worrying stuff in how the markets are taking it. Everybody, please understand if we feel like we're getting away from either of our mandates, like we've told you, we will act. If we feel like we're getting away from our growth mandate, you heard us in September. When we felt like there was a risk to the labor market deteriorating more than we wanted, what did we do? We gave you 50 basis points up front and told you that 150 basis points more are coming. It took the economy getting better over the subsequent several months and the markets unclenching over the subsequent several months for us to go, okay, let's elongate this. You all don't need that much easing up front. So we're not afraid, and we will act if it looks like there's a real growth risk. That's what the markets want to hear. They're not going to get to hear it in earnest because the next Fed policy meeting is not for a while. We hopefully, if you're a bull, let's say, you are hoping that Fed officials start coming out and loudly signaling in this direction. But the next inflection point you have is PCE. And the risk is that you get an unexpected number that's even a tad warmer, to Thomas's point. Because I'm not sure a number in line with expectations does anything to fix sentiment here. It should already be baked in. So the real concern is what happens if it's warmer. I think Thomas is absolutely right. And if that's your next thing for what you think the Fed's going to be looking at and how it might stop them from being as reactive as you want them to be, this thing is in trouble.
Oh, yeah, a few concerning signs. We can try to decompose the top line indexes into some of the bigger components. I'm looking at Apple here. We had that long-standing uptrend from the April, maybe kind of August, but definitely November swing lows. And we can see that when we break down in January, we try to rally back up into that uptrend not once, but twice, including just 2 days ago. And we have since failed. We can take a look at NVIDIA, which obviously in focus today because it just had its earnings out. Yesterday, you and I were looking pretty good about it staying within the expected move by the end of the week. We're now basically at the precipice of that. It's at 120. It's a $12 expected move with at 132. You're basically there, but NVIDIA only a 46 IVR. So there's a little bit of a vol crush coming through, and now into the lower panel of its multi-month range where things have gotten pretty ugly before. So a washout further towards 113 can't be ruled out. We can take a look at Amazon, one of America's largest retailers. Yesterday, Ilya, we were noting how, we had that great hammer candle, but that inverted upper wick, that failure to get back above the 1 week, didn't exactly scream sustainable